as we are here. It is CPI day today. It is 5:50 in the morning Texas time, but 6:50 market time. We'll see if we get anything good today. You can kind of see the SPY. Look at my indicator though, bro. I've been building this indicator. Like I programmed it and it's actually pretty good, like pretty solid. Like take a look at it. Here's the SPY. Like I added it. I have it on TOS as well as TradingView, but like look at this. Nice little breakdown. Nice little breakup. Nice little breakup. Nice little breakdown. Green indicator here, boom. Red indicator there, boom. So literally 1, 2, 3, 4, 5, 6. 6 for 6 today on the SPY. I'll have to keep testing it to see if it continues to work well, but it doesn't look bad, man. It really doesn't. I've built like a gang of indicators at this point in time, an array of indicators. I have like 5 different ones. I have something that I call the 1-minute monster, the 5-minute monster, and then I've got some other like support and resistance ones and stuff like that. So I've built kind of like a, an array of them. And I don't know what I'm going to do. I don't know if I'm going to commercialize that or what. But yeah, it looks good. Yeah, CPI this morning, chat. CPI drops at 8:30 Eastern Standard Time. It's a massive report. I'll put this up on screen. It's expected 0.1% month over month, 2.3% year over year. Will we come in high or low? Let us know live in chat. But yeah. So that is the expected numbers here. Where do we find this indicator? I mean, I don't know. I built it so far. I don't know what I'm doing with it. You'll just have to wait for it if you want it. I've got a couple of variations of it. Like I've added, I don't know if I'm going to, like, I don't know what I'm going to do. But like, look, I can show you some more examples of it here. So here's the SPY. Here's Palantir. Like, look at that. I mean, looks pretty good. So you can see the candle where it shows up right here. Nice little gains. So that's one. Let's keep going. Put some music on here too. Like, look, really nice top, boom. Really nice bottom, boom. Called the top again here, boom. So it's pretty accurate. It really is. Like, you gotta, like, there's a method to it, but and it's not really like a simple indicator either. Like I ended up, what I did with it is I added a bunch of different stuff for it. So I ended up like adding, a bunch of different conditions. I'm not going to be too specific about them. But yeah. Do you think we come in lower than expected or at expectation? I really don't know. I think we might come in higher than expected, but I really don't know. I'm just speculating here. Again, somebody asked me last week. I guess I'm going to stick with that. I think we're going to come in at 2.4. Or no, I'm sorry. Yeah, 2.4% year over year. And I'll just go with 0.2% month to month for regular CPI. That's what I think. I might be wrong. Again, I feel like I have a lot to live up to in regards to CPI. I've gotten like the last 5 CPI reports exactly right, which is weird to me, right? Like I don't know how I've been able to get them all right. And I know it's not going to be able to continue forever. I know eventually I'm going to get one wrong, and that's okay. But yeah, I'm going to go with 2.4, 0.2% month to month. I'll put a timer up on the screen so you guys can see it. We got like an hour. Oh yeah, sorry, I got this timer wrong. Yeah, we're a little bit early, so. There we go. All right, that's pretty accurate. This timer's pretty accurate. All right, so you can see NVIDIA all the way down to 132s today. So NVIDIA all the way down to 132s here. If we look at it, I'll put it up on screen. There's NVIDIA up there, 132s. Palantir moving stuff. We could look at like the SPY. We also have the Tesla Robotaxi event tonight, which is really strange. You know, the SPY broke lifetime highs again yesterday right before the close. Got up to 577.70s. Like, look at the SPY. Here, I'm curious how my indicator did on this thing. Yeah. What about Apple? Yeah. Honestly, look, I can't even, like, look at this. I can't even fake this, you know? Like, this is why it shows you the future of trading is algorithmic. Absolutely algorithmic, right? Like, especially with the rise of everything else, like, the future's algorithmic. Like, look at that. Literally caught the bottom there. Literally caught the top two here. So, we're gonna have to keep building it. But we'll update you later on it. Are we gonna soar or dump or both in the same day? I don't know, man. It depends on what happens. Tesla's another one to watch. Tesla at 243.60s. Yeah. Rest in peace to Chadwick Boseman. That's the one where, like, colon cancer really starts to get scary, you know? Like, rest in peace to that guy, man. Colon cancer is freaking scary. Let me check my Discord. Wonder if it's showing a sign Bitcoin's going to pump soon. Yeah, something we talked about yesterday. Something that's really interesting regarding Bitcoin, I think, here is, like, look at Bitcoin has been in one of the most obvious ranges I've ever seen anything be in. People saying yesterday that this was driven by algorithmic traders, but, like, this has been one of the most obvious ranges I've ever seen anything be in ever. Like, down. Like, look at this. Bottom range, bottom range, bottom range, top range, top range, top range, top range, top range. Literally, it works every time. Like, in that regard, this pullback is not a shocking thing. You know, people will be like, oh, no, Bitcoin pulled back the last few days. It's like, it's just following the trend. It's been in this trend for almost a year straight, like 7-8 months now. So, you know, honestly, I'm worried about buying. Like, if it gets down here, I might buy it up at 50K. I might buy it up at 50K. I'm worried that I'm going to just somehow get unlucky. But in theory, it should drop down to 50K now, right? That seems like a big support before it takes off. But who knows, man? Nobody freaking knows, really. Yeah, I have a bidet, you know. You think Tesla's gonna rip today? It depends on how it behaves for the Cybertruck event. It really does. I really don't know. It depends on how it behaves for Cybertruck event. Just today's CPI report. come in higher or lower than the 0.1% expected month over month. Higher. We're going to do a poll. Vote on the poll. Let me know what you guys think. Does today's CPI report come in high or low versus the 0.1% month to month? Hey, what's up, man? Yeah, that's an interesting fact, P. I think Tesla at 300 by the end of the year. Yeah, I keep saying Cybertruck, the Robotaxi event is today. That's a big event, man. And historically, that's been like a big buy the rumor, sell the news thing with Tesla. Delta Airlines reported earnings today. They posted 197 EPS versus 152 expected, revenue at 15.677 billion versus 14.67 billion expected. So better than expected EPS and revenue. Revenue went up, EPS went up. So that's good. CPI is cooking today. Great. So we have CPI inflation data today, guys. CPI data today. Big day, massive day. Huge day. It's a day you want to pay attention to. Today, just want to thank you for all the content you put out. Thank you, Mark. Appreciate it, bro. 60K support. If that holds, it'll be super bullish. Got to keep in mind Bitcoin seasonality trend stocks. Yeah. It just depends on how long. I'll probably buy it if it drops down here to 50K, most likely. Probably, right? Like, we don't know for sure, but I will probably buy it in that situation, you know. All right, guys. Amazon at 185s. I heard Robotaxi event is 21 and over event. Gonna be a lot of. Not here. You could join this one no matter what. Hoping CPI comes in hot. Want to see a big spy run post elections. Yeah, for sure. Again, 8:30 Eastern Standard Time is when CPI inflation data drops. It's a massive day, guys. It really is. This is a huge report. We still got over an hour left, but yeah. So Palantir's stake in the EV maker Faraday Future touched nearly 9% after converting receivable into equity. TD Bank also stocks is slumping on a report of $3 billion fine and asset cap. All right, so GSK settles the vast majority of their Zantac claims for about $2.2 billion. Does it really? Like, I have acid reflux. Interesting. Yeah, I don't think I've ever really taken Zantac like that. Like but interesting. Yeah, man. So just everybody be safe. Everybody be safe in Florida, man. The hurricane. All right, so Florida's west coast no longer under the hurricane. It's turned into a tropical storm, so that's good. It's moving away from Florida after making landfall on Siesta Key as a major hurricane on Wednesday. As of 5 a.m. today, Milton had a maximum sustained winds of 85 miles per hour, so it's moving past, luckily. Yeah, man, we just had bad timing. We were supposed to go to Disney World right when we were supposed to go Thursday, to put it into perspective. Today, we were supposed to go to Disney. And like I think we would have been fine going today. But you know, everything would be closed. So wouldn't have worked anyway. Acid reflux, buy or sell? Definitely a sell. All right, Mark Z is now the second richest person in the world. Bezos selling all his stock, 13. Yeah. Right, but Sam, so I'm looking at the trend alone, and we could always do something else outside of a trend here, but I'm just looking at this specific trend here, so like we can see it. Right, this trend is one of the most clean trends in all of finance right now. Like that trend alone, that's one of the most clean trends in finance. It's just so clear. Like look at all the confirmations. It literally confirms exactly. People are saying this is because of algorithms and ETF flows. And maybe that's true. But look at that. That's like, that's a bad arrow here. But look at that. That's a very nice, very clean trend here. So is this. Like it's just really obvious. So if it drops to 50K, I'm buying it. But again, yeah, definitely worst timing ever. Top 3 worst ever in the world. Hey, what's up, Freddie? Yeah. Yeah, I mean, it's been trending down, but that's okay. You know, eventually I think it's going to trend up. That's why I don't mind. Big money's behind it now is the thing, right? So big money's now behind it. And so with big money being behind it now, then, you know, it's the path. Yeah, I'm not saying it's a joke, of course. This hurricane's massive and scary. I hope everybody's safe, you know. Well, some are CB, others are going long, you know. What I mean is big money, I mean the ETF. Like now that it has an ETF, people are benefiting from it, and that's going to cause more bullishness on it. Yeah, I'm looking at some of the footage from the hurricane, man. Just rough. They're calling this Florida man who stayed on his boat during the hurricane Lieutenant Dan. All right, guys. I don't know. I think Disney will bounce back and be okay. You know, I think there's risks, but yeah. CPI will affect rate cuts. That's the big thing to look at. When we going into CPI report, right? Today's CPI report in an hour and 20 minutes. Going into this report, right now the likelihood is about 78% thinking we're going to do 25 basis point cut. Again, my question is always this, right? Why the heck do we use the basis point system? Like, dude, why don't you just say we decided to cut rates 0.25% today? 0.25%. Everybody understands that, right? Everybody all across the world understands 0.25%, 0.5%, 0.75%, 1%. You know, like, why say 100 basis points instead of 1%? Why say, why say 25 basis points instead of 0.25%, 50 basis points instead of 0.5%? 75 basis points instead of 0.75%. Like, why not put it in terms like these are interest rates that banks charge each other. Eventually, they trickle into everything else. And so, if you put it in terms that everybody understands interest rates for the most part, and if you didn't say 100 basis points, 75 basis points, people would understand it. Say 0.75 basis points. Say, you know, 0.25% basis, you know, or 0.25%, not 0.75 basis. Just say 0.75%, say 0.5%, say 0.25%. You know, people understand that. Like, in terms of interest rates around the country, people are going to understand what you mean if you say, hey, we're cutting rates 1%. Right? They know that's a big rate cut. Dropping rates 1%. This is no rate, no cut. So almost 22% of people. So, and I'm curious to see. It depends on what inflation does here. You know, again, there's a very famous quote in The Big Short, and it says bankers like to use big words to confuse people, or really just so people leave them alone altogether, right? Really jargon heavy. Finance is really jargon heavy, like a lot of different sayings and slang terms and just jargon. CPI is at 830, yes. Yeah. Tesla should be at $299 by the end of the week. I don't know, man. We'll see. Sounds more scientific, yeah. I guess it's easier to say for some people than 0.25% or 0.5%. I just think it makes more sense if you base it down to what it actually is, which is, you know, 100 basis points is 1%. See, bro, GameStop might be doing what I said they should do. Remember what I said they should do like years ago? I've been saying this for years. GameStop should sell collectibles, right? Same market. It's the same market. I love collectibles. I love video games. I'll go to your store if you start selling Pokemon cards, bro. I'm telling you, I will go to GameStop. My son and I love going, like, looking around for that type of stuff. And so, yeah, again, GameStop pivoting. They tapped into the booming collectibles market, offering PSA graded trading cards. It's attracted a new demographic of collectors, enthusiasts. They're now accepting, you know, specific PSA graded cards at GameStop. And so they're buying and selling Pokemon cards. And I think that's the freaking way. That's the way. You turn yourself into like a comic. Like, if you go to a comic store right now, you look up a comic store, you go to that store, you're going to be able to buy Pokemon cards, Magic the Gathering cards. You're going to be able to buy comics. You're going to be able to buy games. You're going to be able to, there's some of them have like stadiums for card game stadiums and stuff like that. Like, there's ways that they can diversify their business outside of pure video games, and they need to make it up. And I think that's the way to do it. And GameStop, you could still keep your name as GameStop. Like, that's what you do. So. Bro, what do you think, gold buy or sell? I have no idea. If anything, I think you're a bot for asking me that alone. You know, prove to me you're not a bot. Gold buy or sell guy. Well, yeah, but what I mean by comics is just like, yeah, I mean collectibles is what I mean. Like comics kind of fit into the collectibles. You could sell them, but like, you know, that's mostly a dead market. I agree, but collectibles in general, sports collectibles too. You know, I can prove you I'm not a bot if you let me send you a chart. I mean, I don't know. I believe you're not a bot. If everyone understood finance, banks couldn't charge exorbitant fees for their expertise. Yeah, for sure. Yeah, 100%. I agree. If it requires me to download anything green technique, I'm not doing it, bro. I'm sorry. Yeah, so Delta beat earnings, though. So I'm reading this thing Pawn sent me. It says Delta stock slides after earnings miss. But they beat earnings. They came in better than expected EPS, better than expected revenue. What did they miss on? They posted 150 EPS. Oh, okay, never mind. My mistake. I don't know which one of these is right or wrong. So one of them says Delta had Q3 EPS of 197 and they expected 152. The other one says that they posted... adjusted EPS is 150. Okay, so they missed versus 152. Revenue came in at 15.67. They beat revenue, missed EPS. That's what it is. Okay, gotcha. For Delta. And is Delta negatively reacting to this? Let's see. Yeah, Delta's down. Yeah, interesting. Yeah, I mean, I left Chase whatever I was... Like, I was broke and I didn't have that much money. And again, even when I do... So here's my problem. Is like, I'm kind of OCD in a lot of different ways. One of the ways I'm OCD is like, I don't like to sit on money in my bank account. Right? I just feel vulnerable doing so. And so I usually get money. Anytime I get money, I stick it somewhere else. Like either a savings account or some type of less liquid account. Right? Sometimes I invest it in other stuff. I just want to put it somewhere in a less liquid account. I do not like sitting on large sums of money in my bank account. I just don't. And so I had Chase for a long time. And even though I wasn't like broke, right? My bank account might have looked that way, but I wasn't broke at all. But because of that, Chase would intentionally put my orders, like make my orders go through, like make purchases, like random subscriptions that I didn't need anymore. And it's my fault for not canceling them. But Chase would put the order in and then overdraft me over and over and over and over again to where I was spending like $400 or $500 just in overdraft fees a month. You know, when I called Chase and I was like, hey, don't give me overdrafts. Like, basically what I told him is like, don't put the charges through. Like, don't allow the charges to go through if I don't have the money in the account. You know, and again, what I ended up doing was just canceling them anyway. But it was the principle of it. I was like, hey, man, y'all charged me thousands of dollars in fees like last year. And I told him, I was like, listen, it's not that I'm broke. I just take my money and I stick it somewhere else. I don't want my money to sit. And they probably didn't like that either. But Chase is one of the worst, bro. Chase is one of the worst. Listen, I have a lot of different bank accounts. Chase was one of the worst. They just charge you so much for overdraft fees. Okay, well, send me a picture of the chart on TradingViewer. Just tell me what you're looking at, but I'm not going to download anything. Well, that's definitely not true, Z. It just doesn't work. Look, in a lot of ways, I'm very social. Like, I push social aspect. Like, I'm okay with free college. I'm okay with tax money getting spent on that. I think tax money is wasted in a lot of ways. I'm okay with some Medicare. Like, I'm okay with some insurance being free as well. Right? Like, Canada does it, and it's not while it's not perfect for sure, like I've lived in Canada, I've been to the doctor there, right? And while Canada does it and it's not perfect, it's still better for some people than a lot of other stuff. And so I'm okay with certain aspects of that. I don't want to get too political, but I'm also a capitalist. Like, don't get me wrong, I'm a capitalist for sure. Like, communes work when they're in small scale. When they're on large scale, they absolutely do not, and history has shown that time and time and time again, right? And to think that somehow we're just going to get it right this time, even though we've never gotten it right before, is just kind of dumb, in my opinion, But hey, whatever you believe, it's all love here. And again, regardless of whether you agree or disagree with me here, it's all love. I hope you guys understand. Inflation data drops in a little bit over an hour, guys. A little bit over an hour, CPI inflation data drops. Yeah, I just think our tax dollars get spent on a lot of other dumb stuff. And so that's okay with. I'm okay with money getting spent on that. I'm paying taxes. Again, I am paying tens and tens of thousands of dollars in taxes, in some instances over $100K in taxes a year. It's not fun. I hate paying it. Of course, anybody in that situation does, but hey, it's a blessing, right? Like, it's a blessing. Tesla, bounce it up a little bit. Look at Tesla. AMD at 172s. AMD trying to push up. The government pumps way too hard. Oh, yeah. Nvidia also recovering. Yeah, Nvidia down here at 132.50. So Nvidia's moving some. Tesla bouncing at the volume weighted average price. All right. Yeah, I thought about it today, guys. So. Yeah, I'm looking at a couple different things. This one's called the 1 Minute Monster. Yeah, it looks pretty good. Let's see. Short term, but yeah, the 1 Minute Monster honestly looks pretty good. I'm building some stuff in the background here, chat. Check this out. This is what I call the 1 Minute Monster. I'm not going to show you what it is, but check it out. So this is a 1 minute indicator. So you get the green indicator, you get follow through. Green indicator, you get follow through. Right? When you back check it, back test it. Look at this. Red, boom. Red, boom. Green, boom. Green, boom. Green, boom. This one was wrong. This one worked. So that's one. That one worked. That one worked. That one worked a little bit. This one maybe didn't. Look at that one. Boom. Nice breakdown. That one worked. I call this the 1 Minute Monster. I'm still building stuff though. I also have a 5 Minute Monster too. Let me see if I can put that one up too. So that's the 1 Minute Monster. And then I've got the 5 Minute Monster, which is a longer term indicator for sure. But I mean, it's honestly genuinely pretty impressive. Like, look, here's the 5 minute one. Look at that. Green, nice little follow through there. Red, nice little breakdown. Look at that. Literally called the top. Boom. Got the breakdown. Called the top there. Called the top there. Called the bottom here. This one, ambiguous whether it worked or not. This one, nice little breakdown. Look at that. Look at that. Literally called the top. Follow through. Green. Breakdown. Look at that. Literally called the bottom again. Bottom again. Honestly, so these are pretty, look at that, red, called the very top right before the big breakdown, red. And so I'm building some stuff here in the background. I've been working on these for months now, and yeah, they're getting pretty good. Honestly, I might be NASCAR. I might be, bro. Oh, 100K Bitcoin. When do y'all think Bitcoin will hit 100K? Again, CPI inflation data drops in an hour and 15 minutes. Or an hour and 5 minutes. I don't know. I'm building stuff now in the background. Again, I got some of these on TOS too. Like, they're not perfect, but... Like, look, here's an example of one on TOS. So I got it implemented on TOS too. But like, here's AMD yesterday as an example. Look at that. Literally called the bottom. Literally called the top. These don't show up a lot, the one I have on TOS. And I'm still kind of working in the lab with these. But they're pretty good, right? Like, they do good at predicting bottoms and tops. Like, look at that. Look, bottom, bounce, top, breakdown, bottom, bounce. And again, like I said earlier, none of these are necessarily simple, right? Like, these use a lot of different conditions. But that goes against your whole philosophy? No, not necessarily. Listen, my philosophy is very simple. I tell you guys this all the time. I am here to make money. Without question, here to make money. Like, I'm very honest about that. Nobody's spending 4 hours a day live streaming not to make money. Of course, everybody's here to make money. My big thing is I do not sell a course. There's no paywalls behind my content. And we're here to help beginners. We're also here to tell people the truth about trading, which is that most day traders lose. Right? Like, that is my philosophy, without question. But I'm certainly making money doing this. Anybody here is doing that, right? Like, no offense to you guys, but I would rather trust somebody who said, and again, you've heard me say this before, so this is not my first time saying this. I would rather trust somebody who is upfront about their intentions than somebody who pretends to be here out of the kindness of their heart and just likes helping people. And watch me build schools, guys. I just like helping people. I just like teaching, guys. Like, total nonsense. Who would y'all rather trust? Somebody that's real about it or somebody that's just, you know... Yeah. I'm very honest about it. Hey, thank you, Yellow. I appreciate it. Thanks so much. Yeah, the most ridiculous words ever. I just like teaching. I don't trade, guys. I'm not going to take trades. You know, I just like teaching. So buy my course on how to trade, even though I don't trade. And the last time I really made a bunch of money was 15 years ago, and I'm going to try to bring that up and, you know, nonsense. We all long thought John was here out of the goodness of their heart. I like you guys. I think you guys can probably see. I try to help people, you know. Like, I try to genuinely be honest with people and help people. I'm here to, you know, I want to help people, but I'm also here to make money for sure, without question. And everybody is, you know, that's everybody. Running a YouTube channel is stressful and difficult. You know, people are mean. You know, I had a guy who my son was friends with his son, right? And I made the mistake of, I didn't really know this guy well, but when I was kind of talking to him and BSing with him, I kind of ranted a little bit. Huge mistake. I thought he was chill, right? I'm like, hey, man, running a YouTube channel is difficult. People are mean, you know. They, like, harass you. They insult you. It's difficult. I don't know if I want to do this forever. Made the huge mistake of saying that. right? Within a couple weeks, this guy he was already coming on my stream occasionally, but I was upfront about it, and I told him, I was like, hey, look, you're never getting equity in this. If you want to come on my stream and chill, sure, but like, you're never going to get a piece of this. Like this, like, it just doesn't make sense to me. I can run the whole thing by myself. Within weeks, I started getting bots basically praising that guy and smack talking me constantly, like, John's horrible, but this guy Steve is great, you know. You should make Steve co-host. Cough, cough, cough. I'm sitting there like, you freaking dummy, bro. Like, number one, it's so obvious and self-evident. Like, it's so transparent what's happening. Like, if you think I'm dumb and I'm just going to be like, oh, Steve is a great co-host, let me give you equity, Steve. Like, the dumbest decision he could ever make, right? I immediately distanced myself from him and just kind of like never spoke to him again. Just dumb, you know, just dumb. But I guess the overarching lesson there is don't vent to people you don't know, right? Really, it wasn't even like, it was kind of like a, yeah, just don't vent to people you don't know. I knew him, which is crazy, but still, people are weird. I'd buy 31, top 3 helped ever, definitely top 3-ish. You know, I'm weird like this. Hey, thank you, Victor. I've always had the urge to get my pilot's license. I really have. But I am freaking scared of flying. And maybe that's why I want my pilot's license. But I'm scared of flying. I'm buying your course every day, John, by getting on here and supporting you, brother. Thanks for all you do. Everyone hit the like button. Hey, thanks so much. Joking John's cool. Oh, thanks, man. Yeah, I think the whole internet is kind of full of that now, where people do nice things on camera to profit, and I think that's kind of weird, right? Like, I've had the urge to give back to people, you know? Like, I've wanted to be nice to people, but I also, you know, I was watching this story about John Getty, and about how maybe he has, like, a cursed family or something. Like, John Getty was one of the greediest men alive. He was a billionaire, but, like, he was so frugal that it was like horrible. Like, he was so cheap that he was terrible to his family. He didn't trust anybody. He never helped anybody. He never was charitable with it. And so my goal is to just not be like him. I mean, obviously I'm not a billionaire freaking, yeah, but still, I shouldn't be like John Getty. Amazon up to 186s after running up all day yesterday. When you fly by yourself, it's a bit less scary because you are in control. Huh? Yeah. Yeah, that whole time was weird, Pawn. Again, though, the problem, like, I think my guy, like, he drank a lot. And so I think he just, like, bad stuff happens when you drink like that. If you drink too much, you're gonna make bad decisions. You know? And so, like, I don't know if he tried to, if in his head it sounded good, like, hey, you know, YouTube's hard, let me do this and John will make me co-host. Like, just a horrible idea, you know? Just a terrible idea, you know? Like, I'm gonna meet somebody and just randomly, like, elect them to be co-host. Like, no. Sorry, dude. But yeah. Right, for sure. I try to be generous, but I'm not. I am in some ways. Like, I try to help people and I try to do right by people. I genuinely do, right? But I'm also, obviously, I'm also a little selfish in how I am, and everybody is to a certain extent. But yeah, I try. Anyways, Nvidia up to 132.40s. We got Tesla at 244s. We got, what else do you want to look at? We can look at gold. Has gold started to bounce back, or has it just kept dipping here? Here's a 20-day chart. Here's a 15-day chart, or 15-minute chart. Yeah, gold lifetime highs aren't too far away from us. There they are right there at 27.08s. So gold's up there. It's still got some time, but... Do you think you can apply the same readings to Forex trading? Yes and no. Forex trading is good, but it's a... You just got to make sure you could, it's going to be a lot more varied, and it's a lot more spread out symbol wise. Like, different symbols can perform good or bad. You got to find the right symbol that particular day. It's one of the reasons I don't like Forex, is because I can trade the NASDAQ, and I know the NASDAQ is going to move at least some at 9:30 at the opening bell, right? I know the S&P 500 futures contract is going to move at least some at the opening bell. I know the Dow is going to move at least some at the opening bell. With Forex, you don't know what's going to move on any particular day. Some stuff might move a lot, other stuff might move little, and you got to kind of find it every day. I don't like that aspect of it. Tesla at 244, so Tesla's moving up. So we got over 500 people here. Whew, inflation data, guys. Alright, guys, so CPI inflation data drops soon. Does it come in higher or lower? We're going to do a poll on Twitter. It drops in about an hour. Again, give me a follow on Twitter at Beginner Trades if you haven't already, at Beginner Trades. Options trading has seen massive explosion. Many times you're trading against very new traders that know very little about data. And yeah, I mean, I've never been a big options guy, though. What's the min to get on NASDAQ on I'm not sure about that platform. Again, I would try a funded account program if you've never traded futures before, just to get your feet wet with it. Just because you can get started. The base one's $49 on Top Step. That'll give you a 50K demo, and you can try to get funded with that 50K demo. If you make 3K without losing 2K and following their rules, they'll fund you, and then you can do whatever and build up profit. Or it's just a lot less risk instead of funding your own account. But again, they're a sponsor of mine. But if you want to check it out, link is in the description. It's a little bit too early for me to do a real plug this morning regarding Top Step. I try to wait at least an hour or two before I do any plugs in the morning. But yeah, if you want to check it out, links in the description. The only reason I'm bringing it up here is because people are asking me about it. You know, this is such a massive report specifically because of the massive payroll beat that we showed on Friday. On Friday, we showed 70 to 80% higher payrolls than expected. On Friday, non-farm payroll numbers, which gauge jobs, showed up from 145 expected. They showed up at 254. So 254. So technically, this is a 75% increase over the expected number for payroll data. It kind of shocked a lot of people how big payroll data showed up. And again, that's a really important thing because leading into inflation data today, you know, more jobs, higher payrolls could equal more inflation. And so today I'm going to bet that we're going to do slightly higher inflation than expected. What I will say, though, is that if somehow we come in under expected for inflation, the likelihood of a larger rate cut is going to go up. You know, right now, again, if you look at the CME Group page here, right now we got about a, like 75% chance of a 25 basis point cut and a 25% chance of no cut. Another pause. There's a pause right here. This is a 25 basis point cut. So right now it's very probable that we're going to cut at least 25 basis points. But if inflation data comes in light somehow, that's going to mean a higher probability that we are going to cut rates. Higher probability that we're going to cut rates more aggressively, I'll say. You know, so again, we got some votes. 50% think higher, 50% think lower on Twitter. We also got the poll on YouTube. 56% think higher, 45% think, or 54% think higher, 46% think lower. So we'll see. Tesla has their robotaxi event later on this afternoon, this evening, and so that's a massive report that you want to pay attention to as well. But yeah, we got an hour left before CPI comes out, guys. An hour, roughly. We got about 50 minutes. That is massive report today. This is a huge report. Yeah, nobody knows what CPI is going to show up as. Nobody knows. So you like futures best? I mean, I like a little bit of everything. I like stocks. I like futures. Up or down in Bitcoin? I'm not sure. Gold's dipping down a little bit ahead of inflation data here, so you always got to wonder leading into these reports, like, what does big money do? Like, what does big money know is what I want to know. Like, what does big money know ahead of this report? And I don't know. We'll have to wait and see. All right, so according to ESPN, the top 10 MMA fighters of the 21st century are Fedor Emelianenko, Randy Couture, Chuck Liddell, BJ Penn, Kamaru Usman, Khabib, GSP, Anderson Silva, Demetrius Johnson, and John Bones Jones. I'm not mad at this list. I think I'm definitely good with GSP, Jones, Silva, Demetrius Johnson, and Khabib, as well as like Fedor. Fedor should be up there because a lot of people don't know Fedor, but Fedor was like the heavyweight king for years and years and years. Russian Sambo fighter. The only one, I think maybe Kamaru Usman shouldn't be on this list. He's great, but did he set himself apart? I don't know. I don't know. You know, the other one is like Randy Couture. I know Randy Couture had a big impact early in the UFC, but when you compare that impact with some of the fighters today, I don't know. I would put Jose Aldo somewhere. Well, Shamrock was good, you know, but are you trading CPI live? We'll trade a little bit when it drops, but we just have to wait. I don't know. I think Usman would beat GSP if they fought in their prime. I think Usman's beaten GSP actually, but that's just because it's a different level now. It's changed. But in terms of like influence is what I'm looking at. I'm looking at influence. I think Usman falls just under that list. Well, yeah, Silva and Jones are up there for sure. Jones is probably number one. Silva's probably number two. DJ's probably number three. And then I would probably put like GSP, Khabib, BJ Penn, Fedor, Chuck, and then whoever else, you know. So Benzinga is saying to this day, Jeff Bezos still uses a door as a desk, even with the current net worth of $202 billion. Yeah, so a lot of people, do you like Palantir where it's at now, or do you think it's in a bubble? All right, guys, we have 45 minutes left until CPI inflation data comes out. 45 minutes left. Yeah, I guess Connor should be up there too. Connor probably should be ahead of some of these guys. I would put Connor ahead of Randy. I would put Connor ahead of Usman in terms of influence. I'm not sure why Usman's there. Usman was great. He had a great run, right? But you know, in that regard, Amanda Nunes, like, there's some other fighters that could be ahead of Usman. But I agree with Silva, DJ, Jones for sure. You know. Could be a sideways day. Well, I mean, we got inflation data dropping at 8:30. If data is at expectation, does market react? Well, we'll see. We don't know. The market's definitely going to react at least a little bit. Like, we're going to have some movement from this report. The question is just how much. If in theory, right, the bigger discrepancy between expected versus reality is going to mean the bigger discrepancy there, the more volatility we get. Like, the more of a shock we are relative to expectations, the bigger moves we're going to get usually, but not always. You know, sometimes it's nothing's definitive, I guess. Yeah, Rousey did good. Women's MMA caught up to Rousey and surpassed her, though. So she did really good whenever women's MMA was really young, because none of them knew jiu-jitsu at a super high level. And so they just ended up kind of, you know, getting armbarred over and over again. But pretty quickly, women's MMA caught up with Ronda. All right, guys. Gold just hit all-time highs. Yeah, gold hit all-time highs about, 5-6 days ago. Here's a 5-minute chart. Gold hit all-time highs. Maybe it was a little longer than that, huh? Yeah, so gold hit all-time highs on the 26th. So actually, that was 2 weeks ago. So 2 weeks ago exactly, gold hit all-time highs. She was doing judo, not jiu-jitsu. Right, for sure. I understand it was judo. And I understand judo. Like, I train with judokas. Judo, you have like what I like about judo is that you have a specific, and if I said jiu-jitsu, my bad. What I meant is judo. But what I'm saying is, like, if you know jiu-jitsu, you can defend against the armbar, right? And so that's why I said if their jiu-jitsu caught up, they could defend against it. Like, you're not going to stop an Olympic medalist judoka's takedowns, you know. At least they weren't. But if you're good at jiu-jitsu, you might be able to stop the armbar. And hers was good. But judo's good because it gives you like a time frame. Like, if you take somebody down in judo, you've got like a set amount of time to finish it, and if not, they'll stand you back up, which is probably more realistic. Yeah, well, Conor McGregor's effect on the UFC was profound. You know, people, and I always look at people who hate Conor McGregor as that's exactly what he wanted. He wanted you to hate him, right? Because if you hate him, you bought the pay-per-view to see him get knocked out, you know? And so, or if you liked him, you bought the pay-per-view to watch him win. Regardless, you bought the pay-per-view, right? And so that's why he's the richest fighter in the UFC, is because he made you want to watch the fights, right? And so the people who hate him, I think they have a really hard time looking at that aspect of it. Like, you got to look at the money aspect of it. And Conor was very smart about it. Very smart. All right, guys, we got 40 minutes left. Chat, 40 minutes left. CPI inflation data dropping at 8:30 live right here. It's a big day, guys. Payroll data showed up 75% larger than expected on Friday of last week. This shows a much hotter economy than economists expected. The economy heated up a lot more than expected, and this is causing a lot of people to not only worry about inflation problems, but also push for lesser rate cuts by the Fed. You know, the Fed was expected to do another 50 basis point cut prior to the payroll report on Friday, and now they have pivoted to a 25 basis point likelihood, probability of 25 instead. And there's also a 20% plus chance that they might do a pause again, another pause. So they might cut 50, pause. If you guys remember last Fed decision 3 weeks ago, I was pushing for 25. I thought 50 was too large, right? And in hindsight, who was right, guys? You're welcome. 25 was the right move. And I think if they could go back in time, they would do 25. And I think now with payroll data skyrocketing like it has, people are understanding my sentiment here. I told you guys I'm okay with no rate cuts. My worry is inflation. And so that's why today's report is absolutely important, because inflation expectations are massive. Like, we have to figure out how to control inflation. Inflation has gone up dramatically over 5 years. Prices are up in everything. We don't need low interest rates right now. We just don't. Of course, lenders, real estate agents, mortgage brokers, whomever else, people who want to buy a house right now, they want low rates. But you got to understand, real estate prices up 70% in 5 years. Car prices have been crazy. At what point does that correct? We need it to correct. Like pandering to lenders and everybody else is just going to make the situation worse. We just can't have inflation spike again. And so that needs to be everybody's priority. The Feds, traders, investors, that should be everybody's priority, is we can't let inflation spike again. Better to have a good economy with some inflation than have a recession without inflation. I disagree. It's subjective, but I definitely disagree. I think it depends on what we're in right now, guys. So again, inflation has gone up crazy high amounts in the last 5 years since the pandemic. The real reason everybody's unhappy right now is inflation. Prices have gone up so much, people can't afford things anymore. It's trickled into rent. It's trickled into everything. Prices are too freaking high. And so it's an election year, though. And so they have a lot of pressure to stimulate the economy. But the problem is payroll numbers showed that the economy might be heating up a little bit too much. And that scared a lot of people. And now people are wanting less rate cuts for sure. And so, yeah, we'll see what happens. But the number one goal should be inflation, right? The only time prices actually correct, again, prices go up, they don't go back down. So once inflation goes up, it's not like it's going to go back down like this, right? It's going to go up. The best we can do is slow it to where it only goes up like this instead. But again, you do not want inflation to spike again, guys. That's why most people are unhappy. Like, I hear this all the time, and you get people that are really politically biased. But I hear it all the time, and it's kind of the same thing, right? I'll say, hey guys, inflation's the big priority. Or I'll say, hey guys, the economy might be a little bit too strong, and that's not good, right? And then for whatever reason, they get emotional because I say the economy might be too strong, and they say, nuh-uh, the economy's not too strong. Look at everybody, guys. Look at this. Nobody can afford anything. And it's like, yeah, that's my point. Nobody can afford things. The economy's too strong. You got to understand what I mean by that. When I say the economy's too strong, I mean too much spending is occurring, and that's causing problems. And inflation problems are the biggest problem in the market right now. And so, yeah, I would have been okay with no rate cuts. Even if we go into a little mini recession, if it controls inflation longer term, then I'm okay with it, And again, the real reason you see a lot of lenders unhappy is because they had this big bull run in 2021 when interest rates were pushed down by the Fed. QE was happening. Everybody was spending money. 2021 was a massive year for lenders. Interest rates were so low. They did millions of dollars. A lot of them did millions of dollars in income. And then the check came, and inflation spiked up to 10%, and the Fed pivoted to higher rates. And then all that basically dwindled down to where a lot of them are getting much less business now than they were then. And so, they are pushing everybody, oh, we need to cut rates, but it's going to be on the backs of everybody else who are paying ridiculous inflation, increases. So it's just something where you got to understand a thriving economy is not always good, especially if we have a period like we've had over the last 5 years. And this is something that I've been saying for a year straight now. A thriving economy is not always good. Like, we need to combat inflation first because it's not sustainable. $100,000 used to mean something. It's not anymore, right? If we continue at this pace, very, very quickly, people who make 100K, 150K are going to be living paycheck to paycheck. And to a certain extent, they are now already. And so we can't handle more price increases. They've gone up so much already. NVIDIA just went green on the day. It's up to almost 133s. All right, chat. I'm catching back up with the chat. I trade futures mostly. Yeah, the used car market, crazy, right? You're spending 50K on a used Toyota Tacoma. At least you were for a while. And so, of course, guys, like, you got to understand the people pushing for lower rates, right? People pushing for lower rates are lenders, people who work in those markets, because it's a lot easier to, sell stuff. But it's going to be on the backs of everybody else through price increases. Last month's CPI was 2.5% year over year, 0.3% month to month. And again, I think we're going to come in at, I'm going to just go ahead and 0.2% month to month and 2.4% year to year. Straight up guess. I have no freaking idea what's going to happen. But that's my guess. 150K paycheck to paycheck. Exactly, right? He said, where I live, that's a rich man's salary. That is precisely my point, brother. That is exactly my point, which is that, like, you might feel left behind already, right? Look at Amazon spike here, guys. Amazon spiking. You might already feel left behind already. Imagine how it will feel to know that 150K is average. And I'm here to tell you, if we do not control inflation over the next few years, that is where we're going to head much sooner than we otherwise would, right? Eventually, inflation increases, like, regardless. But if we cannot control it over the next 5 years, that's going to be the picture very, very quickly, where 150K doesn't mean anything anymore, right? And then it's going to get to 200K, right? Like, that should scare a lot of people. And it's important for people to understand, like, pandering to lenders so that they can have low interest rates, so they can sell mortgages and bank loans to everybody is not the move right now. It's not the move. Now, to be fair, I'm not trying to scare anybody. I'm being honest. But as well as, like, to be fair, the reason we had such massive inflation spikes following 2020 was not purely the low interest rate environment that we've seen, or that we saw, right? The reason we had inflation spikes in that way was because of supply chain problems. We also had quantitative easing, which is the Fed creating bank reserves. It's a form of money printing. The Fed creates bank reserves and then uses those bank reserves to buy up bonds and other financial assets. And what this does is it injects liquidity into those markets, and ultimately interest rates go down from it, right? But as well as, so that's definitely something that caused inflation, as well as, again, the supply chain problems that we saw post 2020. Right now, the Fed, and something that the Fed did correct here yesterday in the Fed minutes report, the FOMC minutes report came out. It's a breakdown of the last Fed decision, which was the 50 basis point cut. One of the things they did say is that they're not planning on ending QT anytime soon. And so if quantitative easing is one end of the spectrum in regards to balance sheet and money printing, right? Quantitative easing is money printing through creating bank reserves, using those to buy up bonds and other financial assets, injecting liquidity into the bond market and allowing interest rates to go down. The other side of the spectrum there is called quantitative tightening. One is easing, one is tightening. It's a restrictive thing. It basically means that the Federal Reserve does not inject liquidity into those markets at all. They restrict their liquidity, if that makes sense. And instead, they reduce their balance sheet over time by letting their current bond holdings mature and expire and run off their balance sheet, right? And so what this does is basically takes liquidity away from those markets, and interest rates go up when the Fed does this, right? Or at least it adds pressure for interest rates to go up by the Fed. There's less liquidity, right? The Fed is going to continue to do that even if they cut rates. And that's something that the FOMC minutes report yesterday showed us, is that that's what the Fed's probably going to do regardless. And that's good. I think that should ultimately help inflation while also simultaneously allowing us to cut interest rates and bring interest rates down a little bit. Yeah. Yeah. So it's 8:30 Eastern time. Yeah. If you spam buy gold or sell gold, I'm going to put you in timeout. All right. So if you spam that, I'm going to put you in timeout. This is how the monetary system works. It needs inflation to run. Well, it does, but again, it's not always like, listen, guys, having a thriving economy would be great. And if the Federal Reserve wanted to do that, they could certainly do that, right? But there's consequences for that happening. Like, there's consequences. If I sell bubble gum for 25 cents each, and I have 100 pieces and I put it out there, and by noon every day I'm sold out, right? What am I going to do? I'm going to raise the price of bubble gum. I'm going to pump that up to 40 cents a piece. If I sell out of that every day, I'm going to raise the price again. I'm going to bump it up to 50, 60 cents a piece. Pretty soon it'll be $1 a piece, right? And thus is the cycle of inflation in the economy. And so you got to understand, like, thriving economy is great, but it's not always the time for it. And if we've had big inflation spikes, we need a couple years where the economy is not thriving so that we can catch up with prices. Because if not, prices are going to go up and up and up and up and up. And pretty soon, everybody's going to be really unhappy. And so it's important for people to understand. Look at Amazon spiking up right now. I'm seeing if there's any news. Delta Airlines says they are expecting reimbursement for the cost of the harm CrowdStrike costs. Bank of America, Consumer Checkpoint. ECB minutes came out. Incoming data confirmed growth in global activity has been resilient, although recent negative surprises in PMI manufacturing output indicated potential headwinds to the near-term outlook. So the ECB thinking we might have headwinds in the economy there. Why is Amazon up so much? This has to be catalyst driven, right? All right, so it says at $400 billion, Amazon is now projected to have as much cash as Apple and Microsoft combined by 2027. Amazon is going to add Apple TV to Prime Video in the US, and they're going to deploy AI-powered package identifying tech on 1,000 Rivian delivery vans for faster deliveries. So Apple TV is coming to Amazon Prime, but I'm not sure why Amazon popped up like this short term. Yeah, I'm just going through, put the gold spammers in timeout. Right, for sure. And that's what a lot of people don't understand, And again, everybody, it's frustrating because it's like, dude, a low interest rate environment is not always what we need, Like, number one, interest rates right now are about average historically. So it's not like they're crazy, obscenely high. If you look at the 80s, you'll see the difference between, like, interest rates now. Like, let's look at the Fed funds rate, right? Here's the Fed funds rate graph, So this is the rates that the Federal Reserve is influencing through cuts. Look at NVIDIA shoot up, by the way. So, again, we are right here at 5.33. And really, we dipped a little bit. They haven't even showed the dip. We're down here. But look at the freaking 80s, 90s. Like, interest rates, we're basically right here. We're right down the freaking middle. Really, we'd be on the bottom range for a lot of this stuff, too. And so acting like we're just crazy high for interest rates is not freaking true. The problem is that if you see this here, people are just so used to low interest rates now. They've been used to low rates. Look at this. They've been used to low rates since 2005. And so a lot of mortgage brokers, a lot of lenders have never lived through a higher interest rate cycle. And so they're freaking out, panicking, crying about it. But again, if we pander to them, interest rates are going to be low, but inflation's going to spike and there's going to be problems, But yeah, look at the 80s. 1981, 19%. Federal funds rate, 19%. Look at NVIDIA spike though, guys. NVIDIA up to 133s. All right, guys, 25 minutes left. We got 1,200 people here live. I'm going to put it in sub-only mode if you haven't already subscribed. This might get rid of the gold spammers. Okay, it's a huge report today, guys. Just be ready. Yeah, we're getting it ready. Also, guys, if you haven't already, check out TopStep. TopStep funded account program in futures. If you want to day trade, right, you can get exposure to day trading in futures. There's no PDT rule. You can day trade, short, buy market, buy bid, sell the ask. No PDT rule in futures. And on TopStep, it's literally the biggest edge in funding right now. They give you a demo. They test your skill with a demo account first. If you pass the test with the demo, they fund you with a regular account. The base one is $50K. This gives you deep exposure to trading with less risk, right? So TopStep, they give you a demo. They test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. And in the futures market, I can day trade the NASDAQ, the S&P, the Dow, the Russell, gold, some currencies. A lot of Forex traders should be trading futures as well. Most pro day traders trade futures, no PDT restrictions. I can day trade, buy market, sell market. And again, these funded account programs are allowed where most day traders lose. If you put up 1, 2, 3 grand yourself, you're probably going to lose, right? That whole amount. Instead of doing that, try a funded account program. If you lose, the base one's $49 on TopStep. It's not the end of the world. If you pass it, you get a $50K funded account with a 90% split. So 90% is similar to funding yourself, really. But the risk is so much less. And the biggest edge in funding right now is on TopStep because there's zero commissions. Look at the commissions. Zero. 74 cents in fees per micro trade if I'm trading micros. That's the best edge in funding. Some of the best rules in the game in funding as well. And so again, they are a sponsor of mine. They pay me money. I'm biased for sure. But if you want to check it out, great way to help support your boy here in this channel. I'll put the link up right here. Understand CFTC 4.41 hypothetical or simulated performance have limitations. I do trade off stream. You're not going to see my trades. I'm one of the top 3 worst traders ever. All time ever in the world, guys. Don't copy me. Yeah, again, if you spam, if you're spam, give me a saying. If you spam, get banned. I think that's the saying. We have 2 other things slowing the economy down. Well, the port strikes are done. Right? The port strikes are over, no? What's up, fam?
I forgot I can't show my
Shh.
on the TV.
I'm only copying you. Don't do it. You guys, don't do it. Alright, guys. Alright. Alright, guys, sorry. Kids in here. Love y'all. Hey, do good on your test. Hey, study when you get to school, bro. Study. Study. Love you, buddy.
Love you, Daddy.
Love you, buddy. Thank you, man. Just a sweet kid. Just a sweet kid. Alright, guys. Where's this show located? I'm on YouTube right now. All right, so we got a poll going live here, chat. 45.8% of people on X think higher. 54.2% think lower. Lower would be better, just to put it into perspective, right? So lower would be lower inflation, better inflationary data would be lower, right? Now, I'm not saying we get that. I don't know. But I'm guessing we're going to come in slightly higher. It's just my guess based off of payroll data alone. I might be wrong, and it's very random. I mean, we've gotten the last 5 right somehow. But again, I think there's a lot of luck in there. I'm not going to say it's pure luck, but I've gotten the last 4 or 5 CPI reports right. I think it's like the last 4 or 5, right? Again, I know eventually I'm going to get one wrong, though. And so you can't put everything on my CPI report. Oh, we also have jobless claims today. I completely forgot about jobless claims today, guys. We have jobless claims unemployment filings today, too. So that'll be an interesting report as well. I mean, CPI is massively more important. But jobless claims isn't chopped liver. You know, jobless claims expected at 231K. Last time it was 225,000 expected. So, you know, also Amazon is going to deploy an AI package retrieval tech on 1,000 EV vans. The vapor assist drivers in locating the correct packages for delivery using visual and audio clues. Maybe that news is helping them. I'm not sure. But yeah. Probably higher. Yeah, I'm going to go with, again, slightly higher. You're right, I used to be more aware about the overall market effect instead of my own. Why must I choose? Is this real life? What's real life? Yeah, the robo-taxi event might be big. You look 30? Well, thank you, sir. I'm over 30, so I appreciate it. I'm not sure if that was meant in a positive or negative light. But, hey, I'm over 30. So, hey, thanks so much. Wondering even with the same lower CPI, the markets want the news to be bad so it can force Fed perhaps have a higher rate cut. So I think, Sai, I think you got it mixed up though, brother. So or maybe not. Let me see. So understand this, guys. So again, we have CPI inflation data today. If you want more rate cuts, right? If you're pushing for higher rate cuts, you would want, in that regard, lower inflation data, right? Because the risk, if not, you got to think about it like this. The Federal Reserve, if they had no consequence for their rate decisions, right, they would always maintain a low interest rate environment. It benefits everybody. It stimulates the economy. People buy more homes. Rent prices go down generally. The real estate market heats up. Lenders are happy. People have more money to spend. They got cheaper access to leverage and loans and stuff like that. And so in that regard, lower interest rates going to be better if there was no consequence. But there is a consequence, right? And so if inflation, as an example, is spiking up a lot, then the Federal Reserve is going to be a lot more apprehensive over rate cuts than they otherwise would be. And so if we have an inflation problem, the Federal Reserve is not going to cut rates like that. Why? Because cutting rates is going to make inflation worse, not better. Cutting rates aggressively is going to make rates worse, or is going to make inflation worse, not better. And so today's CPI inflation report in that regard is incredibly important because payroll numbers already showed up way higher than expected on Friday. Friday's payroll report was massively higher than expected. Massively higher than expected. And so with such a high payroll number, we showed up at 254,000 payrolls on Friday. The expected number was only 145K. With that number being massively higher than expected, a lot of people are looking at this CPI report today as a guide on whether we should fear inflation now. You know, and if we do start fearing inflation, you're going to see something in that regard in which higher payroll numbers causes a negative reaction in markets. That's what we saw post 2020 when inflation spiked up to 10%. CPI inflation was 10%. Everybody freaked out. Anything that signaled more working, more spending was bad. Like an example, lower unemployment would cause negative market reactions. And so it was that deep where people feared inflation that much following 2021 in the low interest rate, quantitative easing, stimulus check environment of 2021, 2022. So again, that's the big picture today, is what does inflation look like now with the payroll numbers that we saw on Friday? Is inflation a fear? It should be. But today we'll give a deeper story into that. Like, we'll get a deeper look into whether we should be fearing inflation with today's CPI report. And again, it drops at 8:30 in about 15 minutes, 14 minutes, and it is expected at 2.3% year over year and 0.1% month to month. Again, I'm going to guess it shows up at 2.4% year to year and 0.2% month to month, right? But that's just a guess, straight up guess. I have no freaking idea. Yeah, I'm not sure, AP. I really don't know what they're going to do there. Yeah, all good. One of the worst teams in baseball all year is suddenly the hottest. Which one? I haven't been watching baseball. Which team is that in NASCAR? Yeah, for sure, Frost. Tesla seems like a buy the rumor, sell the news event. Yeah, and that's generally how Tesla behaves. Tesla behaves in a buy the rumor, sell the news event. Are you addicted to caffeine? I mean, I like caffeine. I have ADHD though, and so I always get really hyper really, really quickly. Don't judge me, you know. All right, guys. The Tigers? Really? It's been a while since they're doing that good. Hey. Yeah, they've been doing QT since I think 2022, right? So once we had inflation spiked up to 10%, right? Like once inflation got to such an unsustainable level, over 10%, or close to 10% for CPI, the Fed pivoted to raising rates. You know, that's why, like, you see a lot of people try to cover economic data that really don't understand it. You know, you get there, they're calling rate hikes. Some people are betting on rate hikes. Like, you know, you got a lot of people that just don't understand what a rate hike actually is. A rate hike is raising rates. And so following 2021, when inflation spiked, what was the Fed's decision logic? They were like, okay, inflation's spiking up. How do we control it? Let's raise interest rates. By raising interest rates, people have less access to leverage and loans and lending, and so they stop spending as much. And so prices go down, supply and demand, businesses lower prices because of it. And so the Fed's been doing quantitative tightening for a few years now. And again, something that they said in the FOMC minutes report is that they're not ending that. They're continuing to do that. And so that's kind of a more balanced approach by the Fed, where they're cutting rates in some ways, but they're also continuing to do a tightening cycle. So we'll see. Yeah, I mean, if CPI is low and payroll numbers are high, that's a pretty good thing, right? That signals a good economy, but also low inflation, you know? And so part of me also thinks we might get that, but I'm going to just go with balanced and slightly higher inflation data than expected. But I don't know. Again, I could be wrong. What's financial advice? I don't even know what financial advice is, dude. I don't even know what a stock is. What is a stock? Is Shohei back yet? Isn't lowering rates QE though? Well, QE contributes to lower rates, but it's not the same thing. So QE, again, quantitative easing, is a form of money printing in which the Federal Reserve will basically create bank reserves online. Again, it's creating money. They're creating bank reserves online, and then they take those bank reserves and they use it to buy up a bunch of bonds, treasury bonds, and inject liquidity into those markets, right? What this allows banks to do is keep interest rates low for consumers because, like, the prices of bonds have fluctuated because of that injected liquidity into those markets. That's what quantitative easing is. It's not the same thing as rate cuts, but they're both what's called dovish decisions by the Fed, right? Dovish means a low interest rate pushing Fed. Hawkish means a high interest rate pushing Fed. One that wants a restrictive economy. Like, the Fed turns restrictive whenever they want interest rates to go down, or whenever they want inflation to go down. I'm sorry. And if you want inflation to go down, like, logically, right? How do you do it? You put interest rates really high. People can't afford as much stuff now, so they stop spending. And when people stop spending, businesses say, hey, nobody's buying our stuff. Let's lower prices to compensate for it, right? And that's the cycle of it in a nutshell, I guess. But yeah, we got 10 minutes, guys, 10 minutes. We got 2,000 people watching. We got 10 minutes, chat. 10 minutes. Again, hit that subscribe button. Hit the notification bell. I appreciate it. Thanks so much. Bro, did you really spam buy gold again, dude? Here, just ban him for good. He's just a bot. Yeah, we're going to post CPI data on the screen for sure. It's going to be completely live like it always is. All right, guys, 9 minutes. 9 minutes before CPI inflation data drops, chat. Bro, anything can happen year over year, 2.3% month to month, and 0% it can happen today. Yeah, it certainly could. Top 3 most economically educational channels of all time. Definitely top 3-ish. The rates are not only a tool to combat inflation, it's also a tool to monitor unemployment. So the Fed has two goals: not only inflation and unemployment is more important than inflation. Well, yeah, the Fed always takes the same approach. Our end goal is to have a 2% inflation goal over time in a thriving labor market, right? Basically, they want a good economy and good inflation data, right? They want Goldilocks complex is what it is. All right, chat, 8 minutes. 8 minutes. And again, the reason we get thousands of people here is because we cover this quickly, chat. We cover this fast. And so if you haven't already, hit the notification bell, subscribe. Yeah, I don't know, Ty. Who knows, man? A lot of people don't understand the market, right? Like, you know this because people try to pump up all kind of things that aren't pumpable, you know? Palantir's up today, almost up to 50. Celsius? Celsius is kind of risky, no? All right, guys, CPI inflation data, a massive, massive, massive report today, guys. Y'all be careful. It drops in about 7 minutes here, 7 minutes. I've watched many streams and they keep giving advices. I know only 0.00001% of this economy, inflation, or Fed meetings monetary policy, but sometimes I think I know better than them. Yeah, well, they got a lot of streamers that are just kind of piggybacking off of like Fed stuff, but they don't really understand it. A lot of them come from like the meme community, or like they're coming from a lot of like day trading communities where they really don't understand economics. They don't understand the Federal Reserve and decisions and stuff like that, but they cover it, they pretend to, so that they can get views. But you can kind of tell who knows about it and who doesn't. GameStop pivoting to the collectibles, and I think that is a very smart idea. That's something I've been saying they should do. All right, guys, 6 minutes. All right, guys, we got a little bit over 5 minutes left. Again, I'm going to ban you if you ask about buying gold. Okay? I appreciate the love. Thanks so much. Y'all hit the subscribe button, guys. I appreciate that too. But stop spamming buy gold. We're pumping towards 148,000 subscribers. 148K. Guys, we're getting pretty close. Hit the subscribe button, hit the notification bell. We appreciate it. Tomorrow we have PPI inflation data. Tonight we have the Tesla Cybertruck event. Or not, I keep saying Cybertruck. The Tesla Robotaxi event is tonight at 9 o'clock, guys. That's a massive report. Leading into this, guys, hit the live button next to the play button. Make sure you're fully caught up on stream. Hey, what's up, Jan? Hey, thank you. All right, chat, we got 4 minutes left. 4 minutes. 150K subscribers, 2,000 viewers each. I mean, we'll probably have at least over 3,000 here. For this whole stream, though, we'll probably have 20 to 30K views. So, I mean, having 20% of my audience tune in for one specific stream is pretty good, I think. No? You know, I mean, we could try to make 2,000 or 3,000 live viewers seem like chopped liver, but usually you're just trying to hate on something. And that's okay. Listen, let it out, man. It's all right. It'll be okay. Hey, thank you so much, Stan. Yeah, y'all hit that sub button, hit the notification bell. I appreciate it. What will happen if it comes in higher or lower? Well, higher signals more inflation problems. So higher is bad in that regard. Lower is better. Lower means lower inflation. That's better for everybody. Now, the Federal Reserve uses what's called PCE data. So the Fed will use what's called PCE, the Personal Consumption Expenditure Index. That is what the Fed uses to gauge inflation. And again, we'll see. Ban button has to work overtime. Yeah. You're ranked in my top 5. Anytime I want to watch a trading channel, your SEO is great. Hey, thank you, Ollie. I appreciate it, brother. Thanks so much. We try over here. We got to trend set the market. Like, we posted a back testing video before anybody else did. If you look at the first back testing video posted where we back test strategies, we posted the first one like 5 years ago. Now you got all kind of other channels posting them. We also started covering these, and now everybody does, which is good. I mean, listen, we trend set. That's okay. Top 3 ever in the world. Hey, thanks so much for the donation, Ed. We got 2 minutes, chat. 2 minutes. We got about 3,000 viewers here live. We appreciate the love. Thanks so much. What do we think about Nas? He had some good songs in the 90s. No, I'm just joking. You're talking about Natty Gas. I don't really trade Natty Gas. It's not something I like to trade. Thanks so much for the donation, Ed. I don't know. I'm going to guess. Again, straight up guess. Straight up speculation. I'm going to go with 2.4% and 0.2% month to month. Again, straight up guess. No freaking idea. All right, guys. Here we go. We got a minute and a half left. All right, here we go. A minute and a half left. Hey, thanks, Lorenzo. It's going to be brutal. I don't think anybody knows. It might be good. It might be bad. The real question is, again, payroll data showed up last week, right? This showed up a much stronger economy than a lot of people expected. And the nuance of today's report is, what does inflation look like with that in mind, right? What does inflation data look like with that in mind? We got 1 minute left. We got about 3,400 people here live. Y'all hit the sub button, hit the notification bell. Again, I've gotten the last 4 or 5 CPI reports right. I don't know, man. I just don't know if I'm going to get this one right. I don't know. I don't think so do not copy me. Again, I'm going to go with 0.2%, 2.4% month to month, or 2.4% year to year and 0.2% month to month. Straight up guess, though. And that's just based off of payroll data. All right, guys. So, again, CPIs today. CPIs right now. Let's see what we get. Massive report. All right, here we go. This timer's a little bit early, guys. It's a little bit early. 15 seconds. Here we go, guys. 5 seconds. Hit the live button next to the play button. Make sure you're fully caught up. It's dropping right now. CPI showed up at 0.3% for core. Regular CPI 2.4%. 0.2% month to month. Oh my gosh, bro. This is like my 6th in a row that I got exactly right again. How do I keep doing this, dude? It's freaking weird. It's freaking me out. 2.4% month year over year, 0.2% month to month. Bro, this is like my 6th CPI report I have predicted exactly freaking correctly. It's starting to freak me out. How? Bro, I'm sorry for yelling in the mic. I'm kind of genuinely freaked out. The market's actually reacting negatively to this. There's Tesla. There's Amazon. I'm going to put the S&P 500 to the SPY up. I'm sorry, guys, for yelling. It's just freaking weird. It's weird. Dude, jobless claims showed up higher than expected as well. So higher jobless claims, higher inflation data. Weird. It's the organic Fruity Pebbles, bro. Dude, I don't know how I've gotten this right 6 times in a row. It's freaking weird, man. This is bad. This is higher inflation. It's higher inflation data than expected. It's not good inflation data. It's higher inflation data than expected. I'm kind of freaked out, man. It's very strange. It's very strange. This is my 6th CPI report in a row I've gotten correctly. You can look back at my streams that I leave up live. Again, today we got 2.4% year over year, 0.2% month to month. I said that, what, a minute ago before the report dropped, 2 minutes ago, 3 minutes ago before the report dropped. I told you guys this is what I thought. And just very strange. Yeah, people think I'm like insider somehow now because I get these right over and over again. I really don't know how I do. You want to know why we got 4,000 people watching? That's why. It's because people keep seeing me get these right. Again, that's what I said. I want to say that it's just a guess, but I'm using balance to predict it. I'm using logic to predict it. And so, I don't know how I keep doing it, man. It's strange. It really is genuinely weird to me. But with that said, guys, I appreciate the love. Listen, if you want to help support your boy here who keeps getting these CPI reports right, check out TopStep. TopStep funded account program and futures. They give you a demo. They test your skill with the demo. If you pass the test, they fund you. If you fail, you only lose what you pay for it. I'm probably going to start day trading this in my funded account here. I'm going to short this a little bit. We're going to take 2 contracts. This is a funded account program in futures. I'm going to cut out right there. So we just made about 20 bucks. We'll keep trying to trade it, but TopStep gives you a demo. They test your skill with the demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In the futures market, you can day trade the S&P, the NASDAQ, gold, the Dow, the Russell, some currencies. Most pro day traders trade futures, and a lot of Forex traders should be trading futures. And there's no PDT rule. So if you pass the test, you get a 90% split. You got to make 3K on the base one without losing 2K first. It's only 49 bucks a month. And so if you lose, you're only out 49 bucks a month. If you pass it, you get a 50K funded account, 90% split. They paid out over $40 million. And the biggest edge in funding is that in these accounts, there's literally no commission. If you look at all my trades, we've only had 2 trades losses out of 20. That's 90% accuracy. But if you look at this, 74 cents in fees per trade, $8, $11, $4. I can make small little scalps with micro contracts and still net profit on this. It's the biggest edge in funding right now. But they are a sponsor of mine. They pay me money. I'm biased because of it for sure. But if you want to check it out, it honestly is the better way. Most day traders lose. And so I lost thousands. And so instead of losing thousands, limit your risk to 49 bucks a month. And it's just a much cheaper way to learn how to day trade. If you're good enough, you can get funded and then make some money and withdraw. If you're bad, then you only lose the monthly subscription. It just makes sense. Check it out, though. Again, top 3 most biased trader of all time ever in the world. But if you want to check them out, there's the link. Understand CFTC 4.41 hypothetical or simulated performance have limitations. Guys, how do these affect interest rates? Well, I don't think it's going to have some wild effect on interest rates, specifically because it's not super outside the realm of expectations, right? What I mean by that is, like, is it good to have 0.1% higher inflation? No. Is it horribly bad? No. That's probably why the market hasn't really reacted too much to this report, is because it was 0.1% worse. So if it was like 0.4, 0.5% worse, if like inflation data showed up at 2.8, 2.9% versus 2.3%, that's cause for alarm. This one showed up slightly higher. So it's close to neutral. It's still not good, but it's also not like horribly bad either that I think is going to make some wild influence over interest rates. And so again, we can check what the change is to the CME watch tool as we speak here. I'm going to refresh this and we will see if this rate has changed at all since then. So yeah, now it's 80-20. 80-20. And again, you got to understand, we're still at 2.4%. That's still a 0.1% dip relative to last time. Last time we showed up at 2.5. So we're still down a little bit relative to last time. We're just slightly higher than expected here. Slightly higher than expected. Again, guys, I got to figure out a way to profit from this here. Like, part of me is like, I'm living in a simulation here. Like, that's the only thing I can really think of. I know they say the law of attraction and stuff. And again, I've told this story before. I'm going to tell it again. There was a period of time where I was trying to set up my daughter's cell phone. and I was trying to add minutes to it, and we would click the button, it would say like we hit a snag, we hit a snag, we hit a snag, and it did it over and over again. And every time we do it, my daughter would be like, hey, it's not gonna work, it's not gonna work. And sure enough, it didn't work. And so I stopped her. I said, hey, look, we're gonna be positive. This next time it's going to work, right? This next time it's gonna work. And sure enough, after like 10 tries of it failing, I said that, and then the very next time it worked, right? Another time I was watching MLB baseball. I was watching an Angels game, or I was watching baseball games, and I noticed this weird trend where every time I would turn on an MLB game mid-game, the next person at bat would hit a home run. And it happened over and over and over again. And I'm serious. I'm not lying here. It happened over and over and over again. I told my wife and daughter, because I was kind of freaked out by it. I was like, hey, every time I turn on this baseball game, the next person at bat hits a home run. And so while I was having this conversation, they were like, okay, well, let's check it. Let's test it. And so we ended up putting on an Angel game. Taylor Ward. What's his name? Yeah, Taylor Ward on the Angels was up to bat. And again, we turned on this game. Carol's like, hey, we're going to test it. Sure enough, the very next pitch, inside fastball, home run over the left side. And Carol and my daughter freaked out. They were like, hey, what the heck is going on? I don't know. Again, I've never felt like I was more so in a simulation than today. You know, I don't know, man. It's just weird. How am I going to get... again, people can say whatever they want. I've had people say here that... I'm just guessing it's really easy to get this right. It's not. If it was easy to get it right, I don't know, man. It's strange. The number was 2.4% year to year, 0.2% month to month. I'm going to put it up on screen. Sorry, I forgot to put this up on screen. Again, 2.4% year to year, 0.2% month to month is what we showed up as for inflation data. Honestly, though, I'm not even lying, guys. I'm genuinely kind of freaked out. I'm genuinely kind of freaked out. It doesn't make any sense. And again, guys, y'all can go test this. Go look back at all my CPI streams. All right, look at the prediction I give you 10, 15 minutes before the report. And then look at what the actual CPI reports. Look at the last 5 in a row. Kind of freaked out, you know. Bro's so good at predicting the future. Can you predict my future? I think you are going to continue to watch Beginner Trading YouTube channel. And John's the most handsome trader ever in the world. That's what I think. I wish I said the CPI. Yeah. CPI whisper. Confirmation bias? I mean, listen. Of course, listen, here's an actually true thing. So I am a direct descendant of Giles Corey. If you don't know who Giles Corey is, Giles Corey was one of the men in the Salem witch trials he was the more weight guy. And basically, the story of Giles Corey is that he was one of the first men executed in the Salem witch trials, and he's very famous for the saying, and I'm a direct descendant of him. He's very famous for saying more weight, right? So his famous saying is more weight. The reason he said it is because basically at the time the state was trying to get him to admit he was a witch, or I guess a wizard in that situation. And he refused to do it because if he admitted to it, even if it was under duress, then the state could take all the stuff, right? And he wouldn't be able to pass on his stuff to his family. And so instead, he was basically like a big F you to the state. He was basically like, hey, like they were like, are you ready to admit you were a wizard or a witch? And his famous quote, if you read The Crucible, was more weight. basically. Like, basically, they were stoning him, and so direct descendant of him. Well, a wizard, but yeah, you know. Yeah, so where's the bond market at? Look, there's the SPY breaking down a little bit. Amazon up there too. But Amazon's breaking down a little bit, at least some as well. Nvidia down to 131s. And again, what today's data showed is higher inflation. More inflation data than expected. More weight, yeah. Giles Corey? I don't even know if I look like him here. So here's Giles Corey. I kind of do have his nose, and he does kind of look like my grandfather. It's from my dad's side, which is the London last name, L-O-N-D-O-N. Interesting. Anyways, SPY bounced right at that support level we drew. Let's see if that holds. Carol does all the analysis back in the background. I wish she did, bro. If she did, I would pay her, you know. Catch me some write-offs, but I'm going to buy this dip down here. If I was a wizard, do you think I'd do better at like day trading specifically? I'm going to buy 4 contracts. See if we get a little pop, a little bounce. We're day trading futures on Top Step X. Again, no PDT on Top Step X. Literally the biggest edge in funding, in my opinion, right now. There we go. Took a little piece off there. We'll take a little bit more off there. See if the rest can bounce back up. We'll take the rest off there. So we just made another like 20 bucks or so. I'll take it. $40 in the last few trades. Again, here's my last string of trades. So we're doing pretty good accuracy-wise with this too. Again, biggest edge on Top Step X. No PDT rule. 0 commission. Jobless claims. Yeah, jobless claims showed up higher than expected. So jobless claims showed up at 258,000 versus 230K expected. So I'll put that up on screen too. So basically, jobless claims is unemployment filings. So how many people are filing for unemployment? Week to week is what jobless claims are. Again, they showed up at 258,000. So what we saw here for this report, chat. What we saw here from this report is higher inflation data, CPI higher than expected year over year, CPI higher than expected month to month, as well as more people filing for unemployment. So universally, right, I would say none of this stuff is good. None of the reports today were beneficial. You know, inflation data was hot and unemployment was higher, is what we saw today. And this is why when you hear people say that, oh, the numbers are fake or whatever, like, listen. I promise you, nobody wanted these numbers today. Nobody wanted higher inflation and worse unemployment, you know? And so you got to look at the economic data objectively. People have this very common thing. Again, I say this all the time. Nobody cries manipulation more than somebody that's wrong about a prediction, somebody that's wrong about a gauge of the economy. Nobody cries manipulation more. Am I saying there's not any manipulation? Of course not. But there always is at least a base amount, I would say, anywhere in anything. Big scale. All right, we are seeing a bounce now. Yeah, that's stagflation, right? It's a slight amount of stagflation for sure. It's not a heavy amount. Again, data was pretty much neutral, inflation-wise, but it was a little bit higher. More caps you use if the market is manipulated. I think the dip is over. I don't know, man. It's tough to tell. Somebody saying I patted myself on the back too much. I'm not even trying to pat myself on the back. I was honestly kind of in shock about it. Because this prediction is just a little bit different, right? Like, again, I'm not even trying to say how great I am. I'm kind of freaked out by it, in all honesty. So if I repeated myself a lot today, it's not because I'm trying to say, oh, look how good I am. It's because I'm genuinely kind of weirded out by it. But at the same time, I also explained this stuff numerous different times over the last 20 minutes. So, I mean, you know, cry about it. You'll be okay. Big data is coming this tonight. We got the Tesla robotaxi event. That's a massive report. So the robotaxi event is huge today. It's absolutely huge. You know you're great when you have the perpetual fire. You always have great vibes and you know who you are. That's awesome. Wholesome. Hey, thanks, Terrence. I appreciate it, brother. Thanks so much, man. I try over here, you know. To profit from your prediction accuracy, can't you bet on the outcomes of these economic reports? Yeah. My luck would be once I start betting on it. Yeah, so again, inflation data showed up 0.2% versus 0.1% expected, slightly higher than expected. And again, I've said this probably, 5 times in the last 20 minutes. I'll say it again. Inflation data showed up slightly higher than expected. It was almost neutral, right? Jobless claims data showed up at 258K, higher than expected. So more people filing for unemployment as well as higher inflation. Like a slight amount of stagflation is what this report showed. This was the last CPI release before the next rate cut decision. Well, the bigger inflationary gauge is going to be PCE, right? So PCE data, when does that come out next? The next PCE report drops October 31st on Halloween. That is a bigger inflation metric for the Fed. Like, based on what the Fed does, they love to look at PCE data, which is the personal consumption expenditure index. So retail watches CPI more than anybody. But the Fed specifically likes to look at what's called core PCE. So core PCE is what the Fed looks at. And again, this is something on Top Step. Like, look, if you want to day trade, like, look at NVIDIA and then look at the NASDAQ 100. This is basically the QQQ price action. And I can day trade it on Top Step. Even if I were going to trade futures on TOS or something like that, I'm going to pay more in commissions on TOS than I am on Top Step X. And that's the biggest edge, because there's literally no PDT rule in futures. You can day trade short, buy market, sell market. And on Top Step X, there's no commissions either. And so they give you a demo, test your skill. With the demo, you pass the test, they fund you. You fail, you only lose what you pay for it, which in this case is $49 a month. You can always reset it, try it again. But once you're funded, this is a 50K funded account. You can get one up to 150K, 90% split. And I think you get to keep your first 10K in profit. It's something like that. And so I think there's just a lot of big edge. And I think what you have to look at this as is most day traders lose. And so you can either fund your own account trying to look cool and probably lose it, or you can try this, and if you're good enough, you can get a 50K funded account with a 90% split, very similar to funding yourself. But if you lose, your risk is noticeably less, most of the time at least. And so again, if you want to check it out, here's the link. Sponsor mine. Yeah, we can look at what the Fed is going to do in regards to rate cuts now. So we can look at what the Fed's going to do in regards to rate cuts now if we look at like the CME watch tool. So again, we are in a little trade here. We just made $30. We're going to take a little bit more off. We're up about $45 from this short. So far so good. We're up a bit today. We're up about $70 right now to start the morning. But yeah, the next CPI report is going to be man, sorry. Let me find the CME watch tool page. What did I do with it? Yeah, so looking at this report, 82% chance of this. So the odds of a rate cut are even higher now. My guess is because the CPI report did show a little bit less than last month. Last month we showed 2.5. This time we showed up at 2.3. So Look at Amazon spiking up too. So Amazon very bullish right now. Look at it. It's up to 188s. Michael Burry's wrong most of the time. I like Michael Burry. I love The Big Short, but he's wrong most of the time. He's too bearish. He's too hawkish. He's too restrictive. He's too predictive of crashes. Again, Michael Burry's problem is that he doesn't trust the system, and understandably so. Like everybody attacked him, and he was right the whole time in 2008. Right? He lost friends. He got sued, and he made the people that were previously suing him billions of dollars. Right? And so everybody doubted him, attacked him, sued him, and he was right the whole time. Right? But I think that bias in bearish sentiment, like him predicting that one crash correctly, even though everybody else thought he was wrong, caused such a change in his sentiment regarding crashes that he started to bet on market crashes over and over and over again. It's kind of like a drug addict that keeps chasing a high, right? He got this big high from predicting the 2008 crash successfully, that he keeps chasing that feeling. He wants to predict the next big crash. And so what happens is he kept predicting crashes over and over and over again. And he kept being wrong over and over and over again. And so, the famous quote about Michael Burry is that he's predicted 22 of the last 3 market crashes successfully. And so he just over predicts crashes now. And again, he doesn't trust the system. I get it. But have some coffee, enjoying the news. Hey, thanks, Robert. Appreciate it, man. Well, you have to pay an activation fee, Steve, but that's it. After that, I used to listen to Peter. Yeah, I mean, there's a lot of people that overpredict crashes. You got to understand where people try to pull you in different directions, though. And this is what a lot of people have to understand, right? A lot of people are telling us we're going to crash this year, but it's an election year. The likelihood and probabilities of a market crash during election years are so low. It's so low. Anybody screaming market crash right now genuinely doesn't understand historical significance for election years, right? Same thing with recession. It's not that we never have a recession during an election year. It's just super rare. And so people pushing a recession right now or people pushing a crash right now, they generally just don't understand historical data that shows how improbable that is this year. Again, maybe next year in 2025, maybe after that, we could always argue that. But this year's just not very likely. It's just not very likely. And again, the big problem right now is inflation, right? A lot of people are pushing for rate cuts. They're acting like the economy is somehow super weak. And I just don't see it. I'm not saying things are perfect, rosy, but payroll numbers are way higher than expected. Inflation is going up. That generally doesn't necessarily signal some deep recession that we're in. GDP's at 3%. And so what you do have to understand, and what I say every day usually, is that it is an election year. And so it's an election year. And so what that means is that one side's going to say, hey, look how bad it is. Elect our guy, cough, cough, cough. The other side's going to say, hey, look how great it is. Elect our guy, cough, cough, cough. And somewhere in the middle is the truth. And so people have to be resilient to political motivated marketing, I guess, and understand where people are trying to pull you. The truth is somewhere in the middle. Right now, things aren't perfect, but there's too much spending occurring over the last 5 years, and the real problem is inflation. I trade a little bit of everything. I trade ranges a lot, so I like to attack ranges. Something that you see a lot is this, right? Here's a good example of how I trade. Something that I profited from over the last few trades on Top Step X is when the market did this, right? A lot of new rookie traders are gonna say, oh, look, we broke this low. It's the low of the day, guys. We broke the low, and they start shorting right here. Those are my liquidity when I buy this. The likelihood that we're going to continue down here is so low, right? But new traders attack low of the day shorts. They attack high of the day breakouts, and they just simply don't work very much, in my opinion, right? I might be wrong. I'm not saying they don't work in anything. There's always conditions. But experienced traders say, hey, this is the bottom of the range. This is a historical support level. Let's buy this up. And so that's what I did. I bought this up. We wrote it back. Once we hit close to the VWAP, I started shorting it. We wrote it down a little bit. But I attacked that range. I want to look to buy at the bottom of the range, sell at the top. Or I just try to attack trends. But that's what I target here. And I think that's... people have to understand where traders are trying to pull them, where the news is trying to pull them. If you look long-term, same thing. We've had so many little mini crashes, though, over the past few years. Like, we had this one in 2022. You know, early 2022, we had this big correction. Everybody said it was the end of the world right here. Market ripped back up. And people like to use this as an argument for extension here, right? Like, people like to say, hey, we're up 21% this year. Last year, we did 24%. But it's taken the market out of context a little bit. You know, what do I mean by that? What I mean is, like, if you look at where we are now over the last 2 years versus the highs here, right? So if you look at this, what is this, 475 on the SPY? Yeah, we'll call it 475. If you look at how much we're up now, and this was, what, 2 years ago? This was 2.5 years ago. Or this was a year and a half ago, roughly 2 years. We'll call it 2 years. But if you look at the difference from 475 to 575 roughly, which is where we're at now, you know, we are up about 20%. About 20% in 2 years. That's averaging about 10% a year. Maybe a little bit more than that. It's probably about 11% year to year. But those are not crazy gains when you take it into context. You know, what people are really looking at to get these wild percentages is they're looking at the very bottom here at 350. If you look at that level, sure, it looks like we're up crazy amounts. I'm looking at where we are relative to highs, though. And where we're at relative to highs doesn't necessarily mean we're super extended on the upside. I still think we might be due for a pullback here. You know, so I still think we could pull back some. And if we do, I'll probably look to buy it up around the support level here, around $500 on the SPY. But again, as I always say, I have no freaking idea really what we're going to do. Nobody does. You always got to make your own assessment, trade smart, figure out yourself, guys. This is a monthly chart. Layer. This is a monthly chart. Any advice on what stocks to buy for long term? Don't fall into the trap of buying up terrible penny stock companies. You know, rookie traders that don't have big accounts, they don't have that much money. They usually get involved because there's just so much nonsense marketing that floats around. You know, people try to tell them that they could get rich if you just buy up a bunch of terrible penny stocks, and they somehow think that, like, that most of the major blue chip stocks that you know today, like, they had like a lifespan where they started off as penny stocks and then they grew up to teenage stocks and then they turned into mid caps and then they grew up to adults and now they're blue chip companies like Apple and Amazon. And again, almost all of those stocks were never ever penny stocks. You know, if you look back at the price on a long-term chart, it might show that they were penny stocks, but that's because they've been split so much that the charts change, right? The historical charts change. Like, if I look at Amazon and I put up a long-term chart, it might say Amazon was once 7 cents a share, but this was never the case. Amazon has just been split. It's been chopped into pieces so much that it shows 7 cents when really Amazon IPO'd at $18 a share. So this was actually $18 a share, not 7 cents. And that gives people a misconception of, like, they think investing in penny stocks are good. You're almost certain to lose investing in penny stocks. If a company finds themselves low float, under $5, they have gotten themselves in a really, really bad spot financially, right? If a company is under $5 a share, low float, that company has struggled, you know? And so, sure, you might be able to get lucky and buy some that are good. Almost all of those companies are going to fail. You know, so just be smart. Don't get wrapped up in that. It's mostly just marketing. That's my best advice. If you want to buy something long term, in my opinion, not an investment professional, I have no freaking idea what's going to happen. But if you want to buy something long term, the way I do it is I buy blue chip healthy companies and I dollar cost average long term. Or I look for blue chip companies to have like a big dip. Like if Amazon drops 20% on some really, really, really bad news, I might buy it up after that. A lot of the time it'll be around earnings releases, right? If Amazon drops 20% on earnings, I might buy that up. And if it keeps dropping, I just average into it over time because Amazon's going to be fine long term. Almost the entire country uses Amazon. A lot of the world uses Amazon. And so, but there's a difference between Amazon, as an example, and something like a mid-cap stock that is really hyped up short term. I would say, like, no offense, but this might ruffle some feathers. I would say there's a difference between Amazon and something like SoFi, right? Or something like Peloton. or something like Beyond Meat. Like those are all companies that are very new, that got really, really hyped up short term, that are legacy companies. Like, and if you want to short stuff, guys, I've said this 1,000 times, but it genuinely rings true. If you want to short something, these are the type of companies you want to short. You want to short companies that are up so much short term, but they're not legacy companies that everybody uses, right? They're companies that have been overhyped for one reason or another. Beyond Meat, fake meat. Vegans don't touch that stuff, right? Nobody really wants to buy that stuff. It's super expensive. Nobody wants to eat it. It might have a small market, but it's not justifying where it was at $100+ a share. Same thing with Peloton, virtual reality bicycles. Got really big during the pandemic, overhyped, hit $100 a share, was never going to hold. There's a lot of examples of companies like this. You know, you could also find obsolete companies that are trending obsolete. Like a good one that I was like a broken record about was Dish on Demand. Satellite industry regarding TVs is obsolete. You know, streaming has taken them over completely. So my point is, you can find a lot of companies like this. Those are the ones you should short, in my opinion. You shouldn't short the strongest companies in the world: Amazon, Apple, Walmart. You know, those are dumb to short. I'm not a big shorter anyway, but if you want to invest in the strongest companies in the world and just average into them over time. If you really want to be safe, index funds are your friend. You know, S&P, NASDAQ, Dow. You know, I'm not going to say the Russell, but you know, if you dollar cost average over time, in theory, you should make money. It's never 100%. There's always risks, but if you DCA into if I had to pick a long-term position right now, I'm going to buy the S&P, the NASDAQ, the Dow, gold, silver, maybe some lithium, as well as like maybe a small percentage of Bitcoin, and maybe some other crypto. And I'm going to sit on that for 20, 30 years, and I'm always certain to make money on that portfolio. I'd probably add some bonds in there if I really wanted to be risk averse, maybe some real estate investment trusts, so I can really capitalize and diversify on all the different sectors, right? Like that's what I would target. But I would avoid penny stocks. I would avoid most mid-cap stocks except for maybe like a couple, but it would have to be money I'm just okay with losing completely. I mean, the problem with fundamentals is that penny stocks have none most of the time, as well as it's so sensationalized. They'll tell you it's the next Amazon, and it's crap. It's horrible. I've seen so many penny stocks get pumped up here, full of bag holders that are just sitting on wildly losing, depreciating stocks, and they're trying to talk everybody into buying it, and it's like a pyramid scheme almost, right? Where like the people in it pat each other on the back, talk about how great it is, hopefully talk somebody into it. They promise riches. And, you know, it's just most people lose money at it. Bond yields don't move at all. Well, it's kind of early for bond yields to move. Bond yields trickle long term. Here's a 10-year. 10 yields are moving. It's just not down much. I mean, the report is pretty much neutral. So here's 10-year yields. They're still at about 4.4%. Tesla is sitting up a little bit too. Isn't that, Alvaro says, is VU good? Isn't VU a form of the S&P? Yeah. I mean, it's the S&P 500, yeah. I mean, I like it. Long term, short term, who knows? But I like it. Hey, y'all hit that subscribe button. We are very, very close, guys. We are 100 subscribers away from 148,000. We are 100 subs away, guys. Come on, now we can hit that. Try it one time. It might feel good. Hit the subscribe button. Do it now. It might feel good. We are very, 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 very close to 148,000 subscribers. We're pushing towards 150K. Yeah, the Dow's been flying too. I appreciate it, guys. Yeah, so CPI is out. It'll be interesting to see what happens moving forward. You know, the Tesla Cybertruck, or I keep saying Cybertruck, the Tesla Robotaxi event is tonight. That's a big report, a big event. Hey, nice, Sam. Yeah, so Nvidia is fighting its way back up here, and again, we'll probably get ready to day trade this. We're almost at 579s here. I'm so bullish. Yeah, I think so too, man. I think Google will be fine. You know, I was watching something and it said Google is one of the most powerful social media platforms. Like, based off of your subscriber amount, Google has the most influence. And I absolutely agree regarding YouTube, right? So my point is, if you got 100K on Instagram, it's really not that impressive, right? It's just not. You do not have near as much influence as you do on YouTube. If you have 100K on TikTok, it's basically nothing, right? And so the amount of subscribers that you have on YouTube relative to the influence that you have from it is so much higher on YouTube versus every other platform in the world. I was trying to think of who showed this. It was one of those money guys. And it makes sense, right? And his logic of it was that on YouTube specifically, you just have direct access to your following. So I can have 1,000+ people here live and sit here and BS and chat with you guys, and you guys can watch my stream and hang out and watch CPI reports, and I can have so much more of like a legitimate interaction with you guys versus like others where you have like 3 or 4 seconds to really catch somebody's attention. Who's the guy, bro? He's a guy with a beard. He always kind of wears like a nose thing. He runs acquisition.com. Alex Hormozy, right? Alex Hormozy was the guy. I like that dude's content. Really good content. You will day trade closer to the open. We've day traded a little bit today. I'll put the thing up. We've day traded some already. You know, we've been pretty green today. We haven't had we've had losing fills, but every trade, like full trade that I've gotten into, we've made money. So here's my string of trades. We started trading here. So far today in my actual fills, $11.50, $8 profit, $2 losses, $2.50 profit, $8 profit, $9 profit, $13 profit, $12.50 profit, $9.50 profit. So we've made money most of the time. We've only had one losing fill, but even still, the entire trade was green overall. So we're up about $70 today so far. Small, but we're going to wait until the opening bell hits and see if we get something good. Again, we also have the Robotaxi event tonight, which is absolutely massive. Yeah, later, Filipino. Have a good day, brother. Again, I'm kind of freaked out, to be honest, still, guys. Like, I got CPI report exactly right again. It's like my 5th or 6th in a row. I'm going to have to make like a short of all the correct predictions. You get what you believe. You have more of a bias of being right, so your reality shows you the evidence of your belief on every subject. I don't know, man. I don't think... Basically, some people are saying confirmation bias, which confirmation bias basically means I want to confirm what I want to happen or what I want to be the truth, right? And do I want to believe that I'm a wizard that gets CPI report correctly every time? Sure. But I think in terms of stuff like this, in terms of actual predictions, it would be very easy to prove me wrong, right? I would have to just get one wrong, you know? And so I don't know if that's the case. I think this is more of a case of like genuinely accurately predicting every CPI report correctly, and it's weird. It freaks me out, to be honest. People say I'm bragging. I guess I'm kind of bragging. And to be honest, if you got the last 5 CPI reports exactly right, you'd probably brag too. But it's just kind of freaking me out a little bit. It's strange how I've been able to do it. Like, honestly, to be completely real, leading into today's CPI report, I had known I had already gotten the last 4 or 5 exactly right. And so I kind of joked about it. But in my head, I didn't really think that I was going to get this one right. I think I even said that before the stream. I was like, hey, I don't know if I'm going to get this one. So it's just strange that it was another one. And they're starting to just kind of add up, and it's just kind of weird. Again, I've never felt like I was living in a simulation more than 10 seconds after that CPI report dropped. Genuinely, you know. Hey, thank you, McFortune. Appreciate it, bro. Yeah, but I mean, again, you also have to understand it's the Dunning-Kruger effect. Yeah, jobless claims are definitely higher. Yeah, sorry I yelled into the mic. I'm sorry. You mean the SOM rule? The SOM rule is already triggered. SOM rule basically is 0.5% increase relative to the lows of unemployment. But jobless claims, while there's an influence of jobless claims, which is unemployment filings, we got to look at the actual percentage here. But even SOM herself said that she didn't think that this was a valid instance of the SOM rule. John is deep state. I wish, bro. Max Holloway and Ilya Taporia are fighting soon. Who you guys got in that? Tesla even held up. Tesla report, I think, is at 9 o'clock tonight, but I might be wrong. It's kind of at 9 o'clock tonight. So, we still got time. Hey, guys, we need less than 100 subs. Less than 100 subs. Do it now. Hey, thanks, Freddie. Appreciate it, bro. Thank you. Yeah, we're sitting tight waiting here. We got the market opening up in about 14 minutes. All right, chat. Whew. CPI data coming soon. Yeah, hopefully everybody's staying safe during the hurricane, man. Any investors, if you're investing, yeah. Do you think short term, like 2 years maximum, is a good move to buy stuff these days or wait for a big correction? I don't know. That's a little short term for me. I think there's a big chance that we end up pulling back some. But I don't know for sure. The market could certainly keep ripping. I really don't know there. Hey, thank you, Alexander. What do you think about Nike? I like Nike short term or long term. I mean, short term, there's risks. It's been down a lot. I think now's if you're gonna buy it, it's probably. I mean, let me see. What's Nike's PE ratio? Yeah, so I'm looking at Nike here. I'm going to calculate their PE ratio myself, just because sometimes I don't trust the numbers that they give you for PE ratio. So Nike, EPS, last 4 EPS, October 1st is when they reported earnings. So last 4 EPS, 0.7 plus 0.99 plus 0.77 plus 1.03. So 349 yearly EPS. We'll call it 350. Nike price currently at $83. Gives it a P ratio of 23. So it's a pretty good PE ratio. It's not bad for Nike. So Nike, based on how much they make versus their current share price, is actually pretty good valued, I think, right now. There might be some value at Nike right here. Again, I'm not sure, though. You never really know. But PE ratio at 23, 24 is pretty solid. Good PE ratio, Justin, is like 15 to 30. I would say right now in this current market. Historically, a good PE ratio is like 15. But, you know, that's historically. I think inflation has kind of changed a lot of stuff recently. Yeah, V, please don't spam. Hey, what's up, Tiny? Alright guys, again we're going to start the day trade. We're kind of flat right now though. Market hasn't really moved very much at all. It looks a little boring, a little choppy, a little slow here. Tomorrow we also have PPI inflation data, which is pretty big. Next week's a little boring, but tonight we also have the robotaxi event. What happened to the relaxing jazz music? We can put. I got you. I can put that on. Let me find the jazz. I don't know about this one. I like some jazz, but not this one. It's called acid jazz. I don't know what that means. Alright guys, we got 6 minutes. Amazon up to 188 roughly. Any opinions? Better CPI, but labor worse. I think Fed still will cut 25 next meeting. Yeah, I mean, 25 is pretty probable. So, yeah, I mean, that's pretty probable. Yeah, so here's some interesting data from CPI. So regarding CPI, jewelry and watches are up 5.2%, the biggest monthly rise ever for jewelry and watches. Eggs are up 8.4%. College textbooks are up 4.2%. Motor vehicle insurance is now up 16+% year over year. Food and shelter made up 75% of the total increases, and sporting events tickets surged almost 11% in September. So I told you guys, stuff heated up a little bit, inflation-wise. What are watch prices at currently? They're starting to bounce back a little bit for watches. Yeah, insurance came up. I saw it on a Twitter post, X post. Who buys a watch anymore? A lot of people buy watches. Again, luxury watches have an argument. A lot of people don't understand the market. But like you got to think of it. Number one, like we can see rate cut expectations change and trend. So right now, 85% chance of a 25 basis point cut. You got to understand, inflation data was a little bit better than last time. A little bit slower inflation than last time, even though it was higher than the expected number here, right? Like that's the big thing you got to understand. Number two is that watches, like people don't understand Rolexes as an example. Like Rolexes have this stigma attached to them, but a lot of people don't understand the market, right? A lot of people don't understand why the wealthy buy Rolexes. You tell somebody, hey, this Rolex watch is $15,000, and people are like, oh, you're just burning money. What a dumb financial decision, right? A lot of people think that, right? But again, the wealthy understand something here, which is that it's all about diversification, right? Like watches generally, Rolexes specifically, everything else, the other like Rolexes, maybe Omegas. There's some other like Patek Philippe's, Richard Mille. I wouldn't buy a Richard Mille at all, because Richard Mille's too new. And the likelihood of big price swings in there too high. But Rolexes have been around for a long time, over a century. And one of the things that you see in Rolex prices is that Rolex prices go up over time. They keep up with inflation to a certain extent. If I pull up watch chart here, and I just look at Rolex watch charts, right? Here's Rolexes since 2017. So about 8 years. Okay, Rolexes have basically doubled in 8 years in value, right? That's similar to the S&P 500, you know? And so what people don't understand is you can buy a Rolex, wear it for a few years, probably make money on that investment, and then sell it for more than you paid for it. So you basically got a Rolex, a cool watch you can wear for 2, 3, 4, 5 years, and then you'll make money doing it. So you're basically making money to wear a really cool watch. Now, there's obviously some risks in that. Like if you break the watch or if you hurt the watch, it's expensive to fix. But if you're delicate with it and you take care of it and you only wear it for like weddings or whatever you want to wear, you can buy a nice watch, hold it for 5-10 years, make money when you sell it, and you basically got a watch that you were able to wear for a decade that you made money on. You know, so like you got to think about it in that regard. It's not just burning money down the drain. Like one thing the rich and wealthy do is they understand diversification. Now every other watch, Rolex is different than every other thing. Like we have, like there's like Pateks. Pateks are good too. Mills are different though. Richard Mills, RMs, they're really risky. Richard Mills, to put it in perspective, are like 110, 120, 130 grand. The prices fluctuate so much. Let me see if I can find a chart on that. All right, there's the opening bell, guys. Let's see what we get this morning at the opening bell. So far, so good. We're green now. But, yeah. Yeah. Yeah, 100%. Somebody said, yeah, so we're watching the market is down a little bit. We're seeing if it moves. The market's kind of been quiet since CPI. Ed said art watches in New York City apartments are where wealthy keep their assets. 100%. It's really what they do. It's how they diversify into stuff. Classic cars to a certain extent, although I think there's a little bit more risk buying them just because they're a little bit more depreciating in nature. Like you could wear a Rolex for 10 years and if you take care of it, it's going to look brand new and nobody's going to be able to know the difference. If you drive a car for 10 years, you know, that thing's going to be depreciating heavily while you drive it. Every 100 miles you put on that thing is depreciating it, you know. Tesla is breaking down at the opening bell, which is interesting. Nvidia is popping up a little bit. I'm going to actually short this. It's a little bit close to the open to take a trade for me. But we have a cushion that we can play with today. Well, we're probably going to cut this pretty soon. I'm going to let it test this high. I'm going to get out there. $15 loss. Could be worse. I just don't like the pattern. I'm going to take my hands off now. Wait another 5 minutes or so. It looks like exiting there was the better move. Yeah, I mean, again, that's what people don't understand about Rolexes. I think people have to understand what it is, and it's a store of value. All right, so we're consolidating up here. I'm watching Nvidia. If Nvidia starts to turn, we will jump on a short. But I do want to let the market play out a little bit first. We're 3 minutes into the open. Amazon's testing highs again, pushing up towards 188 highs. Nike's still doing okay this morning. Yeah, we're letting the market play out some. We're waiting. Bro, you're showing me when I search for gold CPI news? I mean, but tell me where I put gold up on the chart in the chat. You know, I don't put gold up anywhere. I don't even market myself as a gold person. I mean, I'll put gold up for you, but I don't even market myself as a gold person. I cover it, but nowhere in my titles do you see gold. Nowhere in my keywords do you see it. Nowhere in my anything do you see it. Tags, I just don't include gold. Because I don't really trade gold, I invest in it, but I don't think now's the time to invest in it either. We're watching Nvidia very closely. If Nvidia continues to pump, we will buy this, but I do have to wait a little bit of time first. You are very smart, my guy. You should open a hedge fund. The thing about hedge funds, though, okay, here's the thing, right? And this is what I'm genuinely confused about. So if index funds like the SPY, the NASDAQ, the Dow outperform a large majority of hedge funds, why would anybody in the world choose to invest in a hedge fund? You know? Make it make sense. I know why, but I'm seeing if you guys know why. Right? There's a very specific reason why, and it has to do with the tax advantages of a hedge fund regarding being able to hedge and stuff, but it's tax advantages mostly. Like, people aren't investing in hedge funds for the pure gains that they give you, because typically you could buy the S&P, the NASDAQ, the Dow, and outperform a large majority of hedge funds, you know, so. They historically don't what? Do you trade oil and gold? Sometimes. It's very strange. We had higher inflation data. I'm going to buy this here. We've waited 5 minutes to pass. I just want to see if Nvidia rides this bounce. I will add a little bit to it. We're slightly green. We'll add a little bit to this position. There we go. Alright, we just made about $24, $22 there. Doing so good. We're up about 80 something, almost $100 now. We'll see if we can get some better gains in. There goes Palantir rip, Nvidia ripping up, AI stocks moving a little bit here. Gold bouncing up some. I get seasick. I'm not really a boats person. So we're gonna buy a couple more here. Bad fill on that last little bit. Nvidia's still trying to fight its way back up. Alright, so we're flat on that last little mini trade that we got in. I want to see Nvidia. I'm worried Nvidia might slow down here. Nvidia green though on the day. Do you consider Palantir a penny stock? Palantir's at $43 a share. So no. No, I don't. Alright, so we're in. How did I get such a bad fill there? Alright, well, we made money on that. How much am I up right now? Yeah, we're doing okay. Hey, we only need 80 subscribers left, guys, before we break 148,000. We're getting really close to 150K. Yeah, somebody was trying to hate because they said I only had 2,000 or 3,000 people watching me with 150,000 subscribers. I mean, listen, I think, like, people have to, number one, look at the total amount of viewers you get per stream, right? And, like, to put it in perspective, this CPI stream got about 20-something thousand. Yesterday's FOMC minutes report got about 30,000 views, and so that's like 20% of my whole viewership. And you guys also have to understand, like, my whole viewership is not going to show up for one stream. That's not a reasonable expectation for it. You see, what I see a lot is I see channels with 200,000-300,000 subscribers that get like 300 or 400 people watching their stream, and so you're not going to get your whole audience showing up. But if I was in front of 3,000 or 4,000 people, I would freak out. I would never be able to talk. But since you guys are on the internet, y'all don't exist, and y'all are my internet friends. Okay. Penny stocks, I say low float stocks under $5. As well as like really hyped up stocks that are terrible companies that are under $5 to $10 a share. Alright, so we've somehow got, you're gonna be close to 1 million subs next year, maybe. We'll see. $800, a lot of people. Yeah, I mean, 850 people. No, at CPI, we had 4,000 plus people watching it. And so that's the number I'm using. We're an economic reports channel, so we mostly get a lot of people here for economic reports. People know, number one, that we're accurate, we're very quick in reporting them, and we're consistent in reporting them. Right, so we're gonna buy this dip. 2 contracts. There we go. All right, so we just made another $20. Again, we're up about $100 right now on the day. We're trading small, and then again, this is on Top Step X, and so I can do this here. You can kind of see my accuracy. It's pretty good. We're running 80%, but we're making small gains. So $5, $12, $7, $2, $11, $11, $10, $12, $13, $9, $8. But I'm actually netting profit in all this. And so there's no commissions on Top Step X. I'm day trading futures. So I'm basically day trading the QQQ price action. If you know what the QQQ is, I am basically day trading that. If I put that up on screen, it's the same price action here. Same action. Same opening movement. If you look at it bottom, like look, big upward move dip, If I put this up, big upward move dip. But I can day trade this in futures with no PDT restrictions. The patterns are very similar to like day trading Apple, Amazon. I can also day trade the Dow, the Russell, gold, the S&P 500, some currencies. And so again, you want to check out Top Step. They're top 3 best sponsor in the world right now. If you want to check them out, I'm biased, of course. They pay me money, but good company. I think most day traders lose. And so I think if you try to put the money up yourself, you're almost certain to lose it. And it's just a lot more risk-averse way is to try this. And most day traders are still probably going to lose because most day traders lose regardless of where they are. But it's a lot cheaper to lose on Top Step. And so if you want to put that up, if you want to check that out, here's the link. CPI came in higher than expected. Yeah, tiny. Again, I'm like a broken record. Y'all will never hear the end of it. I'm never going to shut up about it. This is like my 5th or 6th in a row CPI report that I guessed exactly correctly ahead of it. And so again, if you watch this stream 15 minutes before CPI came out, I told you guys, I said I thought it was going to come in at 2.4% on the year and 0.2% month to month. And that's exactly what it showed up as. That's like my 5th or 6th one exactly right. It's really strange. I kind of yelled into the mic afterwards because I genuinely am kind of shocked about it. I mean, I guess I'm bragging a little bit. You know, if y'all did it, y'all would be bragging too. But I'm honestly genuinely kind of freaked out by it. Like I told Carol this last CPI report that I was kind of freaked out about it. And so to get another one right after having that conversation with my wife about it is just kind of weird. Maybe I'm in a simulation. I don't know. I don't want traders to copy me. This sounds like a 90s sitcom intro. It's like Family Matters. Alright, guys. Ugh. Nvidia's up there, though. It's pumping up. The question regarding the NASDAQ is whether Nvidia continues to move up. Again, though, some people say the CPI data, jewelry and watches are up 5.5%, eggs are up 8.5%, college textbooks are up approximately 4%. Vehicle insurance up over 16%. Sporting events tickets up 11% in September. So a lot of people, like, those are the biggest effects of price. And again, this is what I'm trying to tell people, man. Like, a lot of people like to take the most negative approach because it's what gets views, right? So they say, hey, if the Federal Reserve is dovish, pushing interest rates down, they say, oh, no, inflation, it's the end of the world, look out. If the Federal Reserve is hawkish and they're pushing interest rates up, they say, oh, the economy's going to fail, it's the end of the world. And so it's an election year. You get a lot of that going on where people are just trying to make it seem like it's the worst it could ever be. We're not in a horrible spot. I wouldn't say we're in a great spot, but we're not in a terrible spot either. You know, inflation's the problem. Mostly we're seeing inflation because of like what happened in 2020. Stimulus stuff happened. That definitely made inflation worse. Quantitative easing happened. That made inflation worse. Low interest rates happened. That made inflation worse. And now we're kind of in the few years following that. And so, you know, we had some supply chain problems. Those got fixed. That made the economy bounce back faster than a lot of people realized. And that contributed to it too. But, yeah, I mean, we still own that mostly, Chef. What's the benefit of being right? Well, I guess my channel, people tune into the channel on CPI day because they see I've gotten every freaking one right. If there's a way to bet on it, maybe I should. I know there's some derivatives sites that I could bet on this stuff too. Yeah, I'm looking at the Fed Reserve's X account. Yeah, so remember, guys, the Cybertruck event is going to be tonight. Market's actually very flat right now. We're not really doing too much. For whatever reason, I think we might actually break down now. We'll see what my intuition gives me here. We took a piece off already. There's the breakdown. Intuition on point. Yes, intuition on point. You love to see it. We're up over 100 now, so that's nice. Yep. Tesla just cracked lows. Nvidia breaking down. NASDAQ breaking down. SPY breaking down. You get into a flow state of this stuff, and you start to be able to just kind of see it. Look, there's the breakdown. Look at that. Why did I think we're going to break down, guys? Why? There's a couple main reasons, right? If you want to understand and kind of pick my brain a little bit. Look at that breakdown. Hey. When you're right, you're right. But how did I think we're going to break down? Right? Look, that's probably one of the biggest candles we've seen today. The reason I thought we were going to break down is this. All right? It's very easy. We had our triple top here. 1, 2, 3. This is our triple top. Once we break down here, even if we start to bounce up, like, you got to say, what is the probabilities that we have triple top there and we go back up? Right? It's pretty low. That likelihood is pretty low. It's much more probable once we have this triple top up here that we're going to start to break down, right? Why? Well, CPI data came in high. So CPI data came in high. Hello? Hey. Yeah, well, CPI data came in high. As well as, like, I range trade. And so when I see this range here, one of the things I say, number one, is that we've been sideways for too long. Eventually, it's going to break on one side, right? Eventually, this range is going to break. We've been sideways for too long. And so when we have this really tight range here, I'm like, okay, eventually it's going to break. Once we get this triple top up here, so my bias is automatically from CPI on the downside. Once we get this triple top, it's like, okay, it's probably going to break on the downside now. And so that's kind of how we saw it. Yeah, Robotaxi event. I'm curious about it, right? I really am curious about what happens during this Robotaxi event. So we did get a little breakdown here. I'm going to start buying, I guess. I took a piece off here even though I ended it red. I just don't trust it enough. I don't want to give back some of the gains I've made. I think we're down enough where we could start to retrace back up. There we go. So we made money no matter what. We were correct about it. We just needed patience, I guess. But starting to grind our money up a little bit here. Yeah, we're up really nicely. Close to a couple hundred on the day now. Hey, thanks, Corey. This is the NASDAQ futures contract, guys. Remember, in the futures market, you can day trade the S&P, the NASDAQ, the Dow. I'm basically day trading the NASDAQ right now in futures. So I'm basically day trading the NASDAQ in futures. I can day trade short, buy market, sell market. Very similar to day trading stocks. On Top Step X, there's 0 commission. So I can take these small little scalps and grow my account today like you've seen me. And that's kind of what we've been doing. Make $13, $15, $10, $5, $12. Still net profit. 74 cents in fees, 0 commissions. Top Step X is the biggest edge in funding. And so if you want to try to get funded, if you want to try day trading, do not risk thousands of your own money. It makes absolutely no sense. You're almost certain to lose it. Instead, get your feet wet with futures. If you're good enough at futures in a funded account program, then you can move on to everything else. But test yourself first with this. If you're good, they give you a demo, test your skill with it. If you pass that, they fund you between 50K to 150K. The base one's only $49, so your risk is $49 a month as a monthly subscription. And if you pass it, 90% split anyway. And so try that before you risk your own money. It just makes logical sense. But again, I'm biased. They're a sponsor of mine. That'll be my top three least. But that'll be my top three last plug today, guys. My top three last plug. No, sorry to hear. All right, guys. Rangy, Supermicro Semiconductors is it down 6% today? That's honestly not that big of a drop for Supermicro. Supermicro's up big, down big. It's kind of risky. Amazon flat. Tesla down a lot today, 230s. Buy the rumor, sell the news, man. I'm telling you, that's how it goes for Tesla. Alright, I can't handle this song. It's a little annoying. All right, chats. All right, so we're ripping back up a little bit in the market, but still kind of slow, very choppy day. Inflation data did show stronger. All right, guys, I'm going to close it down. Again, we will be back, chat. We will be back for the Robotaxi event later on tonight. I'm pretty sure the Robotaxi event is tonight. Let's see if I can find something. 7 p.m. Pacific, Central Time, 9 p.m. Warner Bros. Studios, California. It's We Robot, right? Yeah. Wait, is it in Salt Lake City or... Oh. It's at a showroom. Look, so there's supposed to be a drone show for this event. The new Robotaxi is supposed to come out. I'm curious, man. I'm excited for this. If it's a good business, I'll buy one. But again, we'll be back. We'll be streaming this live. So rumor has it they're supposed to reveal 3 new cars. Cybercab, Cybervan potentially, rumored Model 2. Again, we'll be back later. Hey, I love you all. You'll have a great day. I'll be back later on today, guys. Y'all be safe. See you guys in a... this is much later, just to put it in perspective, though. So this is at 9 o'clock Central Time. So, yeah, this is late. This is at... Wait, is this at 10 a.m.? $10 o'clock Eastern Time tonight. Why is it so freaking late? That's strange. Anyways, we'll be back much, much later. Y'all be good. Y'all have a great day. Yeah, I'll be here. Later, chat.